Hello, everyone. Hello.
Hello,
Today
hello.
Hello,
we're
hello.
together with Walter, Tiger, and me, and we hope that will be good today to give you some trading setups. Please, you can ask anything that you want. You have a comment section, and now we'll start with Walter. Here you are, Walter.
Hey guys, hope you guys are well. So yeah, I'll get the ball rolling with a bit of gold. But yeah, this is basically just gonna be an update from yesterday because I was on yesterday as well. Um, so wait 1 second to share my screen. There we
Okay.
go. Awesome. All right, so yeah, it's been a pretty good day, trading day today. Friday today was really nice. I kind of took profit on my trade a bit early because I mean I anticipated I'd drop to the daily low, but I didn't anticipate the market to like completely destroy that daily low and keep on dropping. So basically, like my personal trade this morning that I took. When I say this morning, because I'm based in Asia, so morning for me is Asia Open. So this morning's trade session after price broke out of this range, this is basically my trade. So I put my stop loss there, but I only I only aim for like that daily target. So it was a 1 to 4 risk to reward. And then after that, I thought price might swing all the way back up, but it broke through. So kind of missed out on another 1 to 4 hour on this trade. But such is life. You can't always get it all. So yeah, so in terms of like that longer term picture that I talked about yesterday, because I mentioned, of course, that I'm anticipating after price had taken out area of buy side pull, um, the next run was going to be sell side, and that sell side was this daily low. And of course, below that daily low, obviously we have obviously other prior lows like this low, and then the next low after this low is this low down here. But anyways, price has taken out like that daily sell side target. So at this point in time, if I'm going to be looking for a trade in New York, I don't think there's going to be anything major in New York. But if there will be something in New York, it will most likely be a reversal opportunity, just something a bit of a contraction away from this sort of bearish move that has happened. It basically started in New York session yesterday, and then continued into Asia session, and then London session. We saw a continuation of that fall. So New York session, we're probably just going to see some sort of a bullish correction. So that's essentially what I will be looking for. Because of course, like what we're going to be anticipating is the fact that again, price is taking out that H4 low as well. We have a lot of imbalances that was created. So there's a lot of areas that obviously we could target price. But what I typically aim for especially when it comes to correction, is correcting to some form of equilibrium. Now, at this point, I can't really identify the equilibrium because a low hasn't formed yet, right? So price hasn't yet delivered a swing low, right? So what I mean by that is, for me to find an equilibrium, I would need to see price first deliver a swing low, and then after delivering that swing low, I'll then typically use my Fibonacci, go from the high of the range to the low of that range, and then I would identify that midpoint level, and that's going to be the equilibrium of that range, and I will anticipate some form of contraction towards that area. So because that low hasn't formed yet, I'm going to wait for some form of low to form on the 15 or the 30 minutes, whichever one comes first within the next hour or so. So in terms of cycles, 15 minutes is still very clearly in a bearish cycle. We've seen the full bearish cycle that took place in the London session, where the market delivered a retest of that order block and then broke to the downside and then retested. So it basically broke below this on previously unmitigated zone, retested that unmitigated zone, and then broke below the daily sell side target, retested that daily sell side target, and then just kept on running to the downside. So very clean price action on gold for basically the whole of today's session. So what I'm now anticipating, because now obviously this trend is now essentially overextended. We're now seeing that obviously this, I just need to update these levels from here because this was a contraction. The market delivered a higher high, and then came back down. So this is the first low that was created. Market broke below that low, creating a second low down here. And now obviously what we're seeing is that third aggressive phase of this cycle. So again, I'm just going to wait for a swing low to form. Once that swing low forms, this is kind of what I'm going to be looking for. So I'm going to look for the market to form an initial swing low, pull away, and then potentially give a lower low. So we'll take out that low. And then from there, the contraction. That's one scenario. A second scenario is the market forms a low, pulls away, creates a higher low, breaks above the intermediate high that was created. This is what I like to call a secondary breaker structure. And then I would basically be anticipating a retest of the fair value gap, and then looking to trade a continuation from there. So either one of these two structures is what I'll be looking to trade in New York session. So either a variation of a low, lower low, and a break, and then a retest of the order block, or a low, higher low, and then break, and then a retest of the fair value gap. So yeah, I'll keep you guys posted. Obviously, as price does its thing over the next hour or so. And then on the 30 minutes time frame, so there is a bit of alignment, because what I like to look for is, again, that 15 minutes is in the last phases of this bearish push. And the 30 minutes is exactly the same. So we've seen, again, there was a bit of a setup in London today after the market broke to the downside, retested this bearish order block. So similar to what I took in Asia, but this one I personally didn't take it because I was already happy with this. And honestly, I felt a bit of FOMO as well when I saw price kept falling. So what I do in that situation is I remove myself from my charts, because I sometimes end up doing some stupid shit. So I decided, yeah, I'm happy with what I made today. It's a Friday after all, end of the week. I'm not going to force anything more. So I kind of just left that. But this would have been a very, very valid continuation setup to the downside right there. So that could have easily been a 1 to 2, but again, not interested in that. So yeah, price is now in that sort of final stages of its, again, that final leg. So I'm going to wait for that to form before sort of engaging in this within the next hour or so. So yeah, that's it for me on gold. I'm not sure if you guys, I'm happy to give an update on Bitcoin. I'm super excited to talk about Bitcoin. I had a nice trade in this that really that hit TP this morning, but I'm going to give a bit of an update on Bitcoin perhaps after Igor has given his chart. But does anyone have anything to add on gold?
Yeah, Walter. Yeah, because I remember, as we discussed yesterday, I was on gold for the long from, I think, Tuesday. So yeah, I did recognize a point to where it was just kind of going a little too sideways for my taste. So I ended up closing it out for a small winner. Nothing to shake a stick at, but I pulled out in the nick of time because it just cratered right after. So yeah, it just wasn't doing it. On a longer time scale, it wasn't going in my favor. But hey, like I told you yesterday, you can't go broke taking a profit. So I just went ahead and got out. Look for the next play.
Yeah, exactly. There's always the next play around the corner. You cannot go broke taking profit. Like, I'm definitely open to a long play taking shape, but right now, like, my target level, especially particularly on the weekly, is the market will most likely get down to like 3,120. So that's kind of where I'm anticipating price to get to over the next week or so. And then after that, I'm going to start looking for a long plays from that low, potentially back up to 3, 4, or even higher. Like knowing gold could very easily stick within. So this could be the trading range for gold between 3,500 and 3,120 for the duration of the year. And it may not even like break above that high until potentially early next year. So more than happy if price stays in this range, because it's a very wide trading range to catch a lot of beautiful trades in. But yeah, so that's kind of like my higher time frame like vision of gold in terms of like sort of where I see it sort of gravitating towards over the next days or weeks ahead. But yeah, I'm happy to pass this over to you, Tiger, for some updates on FX.
Yeah, absolutely. So I think the common theme for me today is just basically looking to sell the Aussie dollar and sell the US dollar. I know yesterday we had the third GDP report in a row that came in under zero, so in the negative territory.
Yeah.
So the markets didn't like that too much. So really, as far as the pairs that I'm keeping a close eye on today, it looks like it's mainly going to be euro dollar long, New Zealand dollar, US dollar long, and going to be looking to try to short sell the dollar Canada dollar and the dollar Japanese yen. That seems to be the main ones. Right. So yeah, if I just if I just go ahead and get my chart on here, present,
there we go,
share screen, and dollar Canada dollar. Yeah, so Okay, perfect. So, yeah, so just taking a look at the, let's go to the euro dollar first. So, yeah, over the course of yesterday evening, we actually did have on a 30-minute time frame, we had a pretty nice bounce off this 30-minute demand zone. So, a really good one there. That passed. It just goes to show the power of these order blocks, these supply and demand zones. I mean, they're pretty potent. So it did actually create another one right on top of it. So it's a zone on top of a zone. So yeah, I mean, I'd be looking to potentially, looking for a pullback on that. So something like this, come back to catch those unfilled orders to the long side. So I'll definitely have to get an alert set in there. Obviously, we're gonna. And we may still have some unfilled orders left in here, but it has been mitigated. As we agree, Walter, I don't like to touch unmitigated zones unless it's just something that's screaming at me. So I just like to color that light green just so that I know it's already been touched. And then I'm going to go ahead and put a normal green zone on top of it. And we'll just see how price reacts, obviously, if we get a pullback to that. So get that colored in green. Get me an alert set in this area so that I don't miss that. Let's see here, July the 4th. I know we don't trade on the 4th, but I just always set my alerts out typically about a week just so that I don't forget about them. So we'll get that one set right here like that. And yeah, that's probably the best looking setup on the immediate time zones for me for the euro dollar. So we'll go ahead and flip on over here to the next one, which I believe was the New Zealand dollar, US dollar. So let's click over here to that one. Obviously, as always, I start with my daily on the right and my 4 hour on the left, just to get that big picture view that I like. Did a few days, about a week ago, we had a nice bounce off of this demand zone. It did wick through it, but it still respected the area. So obviously, if you have a close stop loss on this area, probably could have stopped you out. But that being a more narrow zone, kind of like we talked about yesterday, I like to have 30 to 50 pip on the 4 hour and daily. I like to have at least 30 to 50 pip range. So yeah, that probably would have gotten close to stopping me out, but I would definitely have given it a little more wiggle room. So yeah, toss of the coin. But I ended up staying away from that one because I think I was in another New Zealand trade at that point. So as always, I don't like to double up my risk on any one currency. I just like to find the best setup and go with it. So having said that, obviously, if we flip down to some smaller time frames here, we do obviously have this. I'm going to delete that there, and I'm going to just flip my Fibonacci here like this. See if we got anything in some. See if we got any zones in some good areas there. Yeah, as far as all these immediate ones, I probably wouldn't be interested in. They've already been touched and mitigated. It is showing me a small demand zone right here in this area. The volume is kind of going downward, though, if you can see my VSA at the bottom. So I probably wouldn't be interested in taking that one. We go over here to this next one. Same thing, the VSA, the volume spread analysis, isn't that good looking coming out of it. So I'd probably ignore that one. This one's obviously been mitigated. We have this one just above the 61.8 level. The volume is starting to grow out of that one at the bottom. So I would probably be interested in taking this one here, just obviously monitoring it if and when price does return to see how it reacts. So I'm just going to throw me on an alert a week out from that point right there, right here, like that. So yeah. Obviously, that one will probably take a few days, but we'll at least see how price reacts if it gets there. So looking at my list, I got dollar Canada dollar and dollar Japanese yen. Those are going to be the other ones. So yeah, just if I'm taking a look at my overall economic surprise meter. So it's essentially taking a collection of all the fundamental report releases as an aggregate, and then kind of finding an average. If it beat expectations, it'll give it a bump up. If it missed, it'll give it a beat downward. So when I look at the 8 major currencies, it appears that the New Zealand dollar and the Japanese yen seem to have surpassed their expectations the most. The dollar, Canada dollar, that's been not so good. The Aussie dollar and the Swiss franc has really been the worst performing as far as, meeting expectations on all these report releases. So anyway, that's just kind of a 30,000 foot view of it. The Japanese yen up there, but again, the Nikkei stock index has been crazy. It's been it's been surpassing a lot of their expectations. So definitely, as far as the indices go, that's one of the best ones, worldwide indices. But anyway, having said all that, let's go take a look here at the dollar Canada dollar, dollar Japanese yen. So on a daily time frame, we are kind of compressing quite tightly into this pennant or flag, whatever you wish to call it. We did kind of wick out of it at one point, but look, whenever price gets to this point, it's going to, in my opinion, it's going to go real strong one way or the other. So we'll take a look, but it's definitely getting tight. So, but anyway, having said that, I'm looking to short sell this. So on a 4 hour, I don't see anything immediately. You can see it actually did bounce off of this supply zone. What was that? A few weeks ago, a couple weeks ago. Or no, Monday. I'm sorry. That Monday, the 23rd. Yeah. So just goes to show the power of these supply and demand zones. I mean, it just wicked in nicely and bottom fell out of it. So on a 4 hour time frame, it is currently bouncing into a supply zone, but that supply zone, when it left, it didn't really create the greatest fair value gap showing strength. So I wouldn't be interested in short selling right in this area. And plus, it really didn't go that far relative to these recent swing highs and swing lows. So, for me to have been interested in that zone, I would have preferred to see price come down and take out all of this former demand over here before coming up for a short sell, to the downside. So for that reason alone, I'm going to ignore that zone, and we'll just take a look on some smaller time frames to see if anything new pops out of that. It is giving me this one here on a 2 hour. Probably, let's see here. Yeah, decent volume coming out of it. It's just a little too narrow for my taste. Again, I like those 30, 40, 50 pip zones. So we'll just flip on down to the 1 hour. Now on a 1 hour, it is giving me this extreme top here. So that would be one I would probably be interested in taking a look at, because as you can see, the VSA bar, that's yellow down below there. So that's a pretty strong bar that exited the zone. So I do like that. So having said that, I'm going to go ahead and put in an alert on top of the proximal line of that zone there. So let's just go ahead and flip this down here. And then I'll just move that on up here like that. So yeah, I would be more interested in checking out that one, see how price reacts. And not only that, but anytime you see a blue dashed line on my charts, it's because of a higher time frame former resistance or support area. So if I take that same mark, let's see here, what was that, the 145.92. So yeah. So as you can see over here on my daily, that's just a point right there, a former resistance point before price dropped sharply. So I just like to see those on the higher time frames just to see where we had some big turns. So I do like that is going through that zone. And not only that, it is going, it would potentially be wicking through this downward line, this overall downward line. So yeah, just a few different variables in the favor of this. So we'll definitely make that one of the top short sell opportunities over the next couple days or so, whenever price gets up there. So next is dollar Canada dollar. So we'll take one look at that. Pretty nice overall higher time frame downtrend. Again, that GDP is definitely weighing heavy on the dollar. It doesn't look like anybody like that. So I did identify, on a 4 hour, I did have a 4 hour supply zone overhead here. Okay, so that's definitely one I'll be looking at. But in the more near term on the hour, we do have one right here. So I love the volume that came out of this. by the VSA candles, but I don't like that the candle that left didn't go that far. So I would have rather that candle come all the way down like this candle. So personally, I'm probably not going to be interested in that one. Plus, if you run a fib from here to here, I mean, it is coming up to 50%, but obviously the 61.8 would be more in this area. So yeah, having said that, my preference would be definitely the 4-hour supplies. So just throw a quick alert on that one as well. And then I think that'll be the main ones for me at the moment. So obviously, as the stream goes, I'm gonna. Oh, I ran out of alerts. I'm gonna have to delete some old ones, which I can do off stream. Guess it's time to get that higher package. I'm actually looking to go up.
This is how they upsell you, man. That's how they upsell you.
Yeah.
You need to.
Well, I've been noticing. Yeah, I've been wanting to get into the footprint chart anyway. So it's the next package up from where I'm at. So. Just to kind of take a look at that footprint chart. I don't know. Do you guys have experience with the footprint? I know I've seen a couple other streamers been using it.
Yeah, it's not part of my analysis, but I know some other guys that utilize it. Yeah. But it's just not generally something that I that would add anything to my analysis.
Right. Yeah.
Yes,
I heard.
I use, but if you want to see how to use perfectly, you have the coach on Hola Prime. His name is Sam, and he's using very, very often footprint. So you can watch his videos. He's really good expert there.
Yeah. And I think Troy was talking about it yesterday. Like if you're a scalper, that's a really good tool. So anyway, time to go up so I can get some more alerts anyway. But yeah, I think that's really the top 4 that I'm looking at. So Igor, if you have any thoughts on those or some of the other currency pairs, I guess I'll just pass it off to you for now and see if we got any more plays deeper.
No problem.
By the way,
I just have one question for you, Taiga.
Yes.
What is your opinion about US dollar index for the next week? How do you see that? Just in your way.
Yeah, the index. So it has definitely been going down like crazy. I don't see a stop in sight, to be honest. I mean, with all these reports that have been coming out now, a lot of the dollar fundamental reports this week have been good, but it just seems like that GDP report's just been weighing heavy. So yeah, that's really, when it comes to the way I look at fundamental and sentimental reports and analysis, that's the most common theme is short the dollar. So obviously it's a dynamic list. I kind of went over it on the stream yesterday with Walter and Richard, kind of how I follow the reporting. But I mean, three reports in a row. I mean, if I can actually, you know what? I can just take a quick. Let me just show you this real quick. Where is that? Nice. Let me just find it on my chart real quick here. Okay. So let me just share this tab real quick. So yeah, look at this. I mean, this is, we've had constant 3%. We did dip down to 1.5%, and then up to 3%, and the high 2s, mid 2s. But then the last 3 months, look at that. It's just been sick.
Yeah.
So I think that's what the market's digesting right now is like, well, we're going to grow. We're going to make any money. What's going on here? So, I'm definitely short it. And obviously, when you look at the Dixie itself, let me go back over to this tab. I mean, that's just sick looking. I mean, you do have, I know we don't trade the index, but obviously the Dixie, the DX1 futures looks very similar. So you don't really have a whole lot of what I would call demand, but basically support if we're just looking at the indices until we get down to this level, the 95 level. So I see it going further down. I mean, let's take a look real quick at the DX futures. I mean, I'm not a futures trader, but I still monitor it. So let me just get rid of all these old drawings over here. Remove 3 drawings. I mean, it looks like on a daily time frame, we do have this daily demand zone trying to form over here. Okay. Last red candle down before a big spike up. So, so I would definitely see it going down to at least 96.25. mean, it's really not that far away, to be honest. But yeah, it'd be interesting to see what happens if and when price reaches this area as far as the futures, because obviously the index is pretty similar. So yeah, definitely down, but we might get a sharp bounce. I mean, that might push it back up to the 98 level where you see that overhead supply. Okay, so yeah, it's definitely definitely going to be an interesting one. We could see something like this to where it comes back up to this area and goes down. We may see, I mean, we may see price come down, bounce, come back up, and just shoot right through it, and then use it for a, you know, support turn to resistance. I mean, I don't know. I just think that GDP report's got everybody in a tizzy. So that's what I got on that. What's your thoughts?
Nice, Iker. Excellent, excellent. So I will just share my screen. First, what I want to do right now is just to show my trade. And then I will talk more about my setups. So just to show you, I hope that you will see. Yes. So I filled one trade just a couple hours ago. What I did, I sell British pound dollar again. I always play around these levels. My stop loss is around previous low. Now I will maybe just put it around 3751 level. And my profit is around 1.367 from British pound dollar. But I will just explain you everything in the trading view. Just I had this trade right now, and on the trading view, I will show you what I'm looking for. So let me start from the beginning, just to understand my setup right now. For the US dollar index, let me start from the beginning. Of course, this is the really, really bad. We're going down. However, dollar index, so I don't know how well this day will end up. I would like to see a little bullish attempt today, and I will just describe you why I want to see that. So let me start from the weekly chart. From the weekly chart, I have one idea, and I will just show you that. I have one trend line, and that trend line is since 2008. So it's more than 17 years. Mm-hmm. And as you can see, this trend line for US dollar index is a rising trend line. And now we're very, very close to touch this trend line. My assumption is that there is a chance that that can be a low for US dollar index. And after that, US dollar index can start to go up again. That can happen maybe this summer, maybe in the beginning of September. I don't know how market will react here, but this is one of idea that I want to see related to the market. Now, this is just a macro on a weekly, multi-weekly chart for last 17, 18 years. But when we speak about last 24 hours, I noticed that this kind of the trend line. Today, we are trying to push higher. Even this morning, we just like start to break a little bit. Then there was some kind of rejection, but US index is struggling during the Friday. And that can be very, very valuable for my trade. Now, I'm back for British pound dollar. Highest high in last 5 years, and that was around level 1.3770. And what's happened there? After that, we see and we are breaking right now, which means if we break in next 15 minutes. So in next 15 minutes, we see the break here. There is a big chance that today we will never see the new high. So we will push the price lower, maybe in this range right now, maybe lower. I don't know. But what can happen here is that we don't have the new high for British pound dollar today. Now, based on my analysis for last couple decades, whenever you have the highest high during the Thursday, that means for every market, especially for indices and for Forex, of course. And in Friday, you cannot hit the high. There is a high rejection during the Friday. Monday is the day when you will see the bearish push. And that I want to see right now for British pound dollar, if everything is smooth that I want to see. Of course, anything can change in next half hour. And because the problem with relative strength index indicator, only indicators I use, they repaint, and only valuable information is on the close of the hour. So I want to see in next 15 minutes close of the hour, and to see this kind of the break, and then I will change my shift and protect my trade that I already have. So I want to see a bearish British pound dollar today and in Monday, and after that we will see what will be that push downside. And of course, I think that we will see the new highs for British pound dollar. But for now, it's like that. What is the important thing too, based on statistics? The last time when we were in this area right now, around above 1.37 level, that was in the January, February, March, and April in 2021. Mm-hmm. And then when we hit the high, the highest high was 1.3765, 5 pips difference than yesterday, which means that institutional traders, they like to copy weekly low, weekly high, monthly low, monthly high trades from the past, and like to enter in those levels. So this is why I want to see some bigger push down, and then to break and see the next level, which should be around 1.385 for British pound dollar. And this is just the first attempt that I want to see. Now, related to the other currency pairs, euro dollar is pretty interesting. Why is pretty interesting is because we didn't hit the new highs for the British pound dollar, but we hit the new high today for euro dollar. So the high was just an hour ago, and the high was around 1.7050 level. And this is the highest high for the long time. And because of that, the trade that we had today was very interesting related to euro dollar. And let me just show you this. If we draw a trend line or relative strength index in June 18, and we monitor this trend line is fascinating. Why? Because we had one attempt on the June 20, then dot on the Monday, June 23, then almost on the Wednesday 25, then 2 times yesterday. And what's happened today, when we touch again, we made push upside. So we made 50 pips this morning just after we touched this very, very strong support for euro dollar. And I want to see today that we break this support. I would like to see that. That will be additional trigger that US dollar index, British pound dollar, and euro dollar all on the same side, where US dollars try to recover and euro dollar and British pound dollar trying to go down and to make a little bit retrace before the new bounce. So this is my plan right now. I want to see today without new highs for euro dollar and British pound dollar. I want to see the break, and I will monitor that. Now about trades, I like your trade, Walter, relating to the gold. And I would just show you the trade from the yesterday when it was Paul, Jannie, and me. I just talk about that trade, and I would just show you how technical analysis can be very, very good sometimes. So here, so it was the yesterday, and we just do like this. Had some kind of bullish trend since the Tuesday. It was related to the US dollar index because the US dollar index whole this week was very, very weak. And the gold started to go up, breakout down. But what's happened after this breakout, there was a retest. So we went up, and what's happened, the price just hit the VWAP and then start to go down. So this trade, when the price touched the VWAP, it was yesterday in the evening. I missed that trade because I was home, and in my time I was ready almost to sleep. And what's happened then is we touched that point and just go down. So during whole Asia and Euro session, we went pretty down, and that trade was really good for gold. And I described this trade, talked about this trade yesterday, and I picked to hold the British pound dollar sell order. And I didn't want to have, two trades on the different sides. And that happens to me. Just miss that kind of the opportunity. So the good thing is that the gold now is not interesting for me, neither for buying, neither for selling right now. And this is the trades that I like to monitor right now and to trade, actually. The only thing that I wonder right now is related to the stock market and indices. So for the people who like to trade indices, what I'm looking right now is something that usually some kind of the breakout is preparing. And I just want to monitor that. It's I think, couple days bearish move for the stock market. And I will just describe what's happened here. Whenever I see that during the whole week for the indices, the leading indicator was bullish NASDAQ, and the percentage of the gain for the NASDAQ was bigger than for S&P and Dow index. So, for example, when we got 0.5% for the NASDAQ, Dow S&P 500 were 0.25% or something like that. So whenever NASDAQ is leading, first NASDAQ start to push higher, and then S&P and Dow follow. That was the story during the whole this week. But today we have something different. We have that the S&P and Dow has a bigger percentage, and NASDAQ is going down. And usually when I see this at Friday, it's some kind of the trigger. It's not clear trigger, of course, that maybe we can see some kind of the pullback. Maybe in the second part of the Friday, maybe in Monday, I don't know when, but some kind of the bearish move, short-term lived, of course, preparing for the stock market. And I think that's correlated with my scenario that US dollar index will try to recover, and in the same time, US dollar index just to go a little bit down. I will monitor that, and maybe I will catch some kind of the set there. But for the now, I'm just watching. I will not trade that. I'm just watching that. For other currency pairs that I usually trade, in last month, I do not trade US dollar Japanese yen. Because it's a really in some kind of the range, in some kind of pretty awkward moves. Because whole week the US dollar index went so down, and US dollar Japanese yen were in some kind of the range. There was no push downside because the US dollar index, and because of that, I think it's not interesting for me. And I now I see how actually pushing a little bit higher there. And on the chart, you can see when you see the move of the euro dollar, British pound dollar, compare this move for US dollar, Japanese yen, you can see how it's really boring for my taste. However, if we see the US dollar index recovery for the couple days or 1 day or 2 days, maybe someone can be interesting to buy US dollar, Japanese yen. As you can see right now, and on the 1 hour chart, we can see some kind of the bullish move that I just monitored. So I think whenever we push higher on relative strength index indicator and push it higher and higher and keep this trend line up, there is a chance that US dollar, Japanese yen can touch new highs. If we see the breakout of this, we will again enter in some zone, range zone, I don't know, but there's no big momentum, big trend that I want to catch there. And the same stories for Aussie dollar and Kiwi dollar. So if you see just daily chart, so just look at the daily chart, how this boring a relative strength index indicator like a straight line when you watch relative strength index. Even that we got 4 bullish candles on daily level, even that we are not still in some big push upside. And the same story for the Kiwi dollar too, as you can see, relative strength index indicator. So like a very, very boring. And I'm out. I don't want to touch this pairs. Even that I'm a range. For example, if I'm a range trader, I don't want to trade this because very often we can see the false breakout, then again enter in the range, which I see very often. And because of that, I will be out of these currency pairs for now, for sure. So this is the setups for that. So guys, do you have questions for me? Robert, do you have any question?
Yeah, Igor, what are your thoughts on VWAP? So do you use anchored VWAP or do you just use the daily VWAP? However, it's like default setting, the default setting.
Yes. I like to use session daily. We to use especially when we have volatile market. I do not use because when we have very volatile market like now, when we can get 200 pips upside for British pound dollar, euro dollar, anything, it's very important to watch this VWAP because this standard deviation that we have from the VWAP, and that is the very, very, very important. Very important. The VWAP is during the UK Open, Frankfurt Open, and US Open. Usually, we have a manipulation in the price for any asset related to the major forex market, and then when we have that manipulation, we attempt to go from the one standard deviation VWAP to another standard deviation VWAP. Or, for example, I will just give an example just to see how that can be very, very powerful. So let me watch Wednesday, June 25, for example. So above the standard deviation above VWAP, and we are going higher during the Asia session. And then in one moment during the Frankfurt Open, we touch the VWAP level, just touch that level. And from that level, we start to go up and we touch the new high for the day. And I just want to show how this VWAP can be very, very good used just to find that low price if you want to be bullish, or to find the high price if you want to be bearish during the moments of manipulation and the UK Open, US Open, etc. So this is the reason why I'm using this. And of course, if I use for the stock market, then it's a more beneficial than anything else. This is my approach for that,
Yeah.
Taiga.
Yeah, no, it's a powerful indicator. I started using it at first when I was messing around with some penny stock trading. And then I just kind of carried it over into my Forex. And yeah, but I like to use, me personally, I like to use the anchored because I like to move it from the low points to the high points and just kind of, like, I guess I could show you if you want me to show on the screen real quick.
Yes, yes, please. I would just like to see that.
Yeah. So let me, and also I'm looking to get into a silver trade, by the way. So,
what direction are you looking to take the silver? I'm about to get into a gold trade and Bitcoin trade as well.
Okay. Are you long or short?
Currently long gold and short Bitcoin, but
okay.
I'll touch on the Bitcoin shortly after you.
Yeah. Oh, is my screen popping up?
Oh, it's not up yet. By the way, Robert, I saw your message. No worries at all. Got another Bitcoin trade lineup in a few minutes as well.
Well, let's get this to work in real quick. Share screen. I guess it's taking a minute to get on.
Yes.
There we go. Okay.
Sorry. No, sorry. It was my mistake. My mistake. I will remove myself and add you.
Oh, okay. I got you. No worries. So yeah. So as far as silver goes, when I'm looking at my fundamental and economic reports, for silver, it was neutral for the most part on the COT report, but the retail traders, they are obviously trying to short it when you're looking at the retail sentiment. But seasonality has given me a point. The recent GDP reports, the manufacturing and the services PMIs, those are positive for silver. Retail sales, CPI, PCE, and the interest rates. So those are all in favor of silver. And really, there's only two things that are against the silver, and that's the employment change numbers. And I guess it is showing for the trend. So anyway, overall, it's given me a seven score, which 5 or higher is bullish. So I'm going to go with that. But yeah, going back to this. So I drew the other day when price was right here, I drew this as a potential point down into this demand zone, which I really like. And I still do. This is my favorite one because I have a 4-hour demand zone inside of a daily demand zone. So that's just excellent confluence. But I'm going to go ahead and probably take a stab because since then we have created this 4-hour demand zone here. Really nice spike out of that. Good fair value gap. Pretty decent volume spike at the bottom on that candle coming out. It didn't necessarily go as high as I want. I would have preferred to have seen it, continue out like this and break all these highs over here before coming back. So having said that, though, it is bound. That demand zone is also within kind of a minor master pattern box. So that pushes out a value line, which you can't see because I got all those drawings, but there you go. So like this is a minor contraction box, and it pushes out that yellow line at the 50% of the box. So that acts as another type of a support. So yeah, I'm liking that.
It's basically the midpoint of that range.
Correct. So yeah, the 4-hour candle coming out of that and the candle before, obviously really strong wicks. So that's definitely some pretty good rejection. So essentially what I think I'm probably going to do, fellas, is look to put a stop limit order just above this area right here, that wick, on the way out of that newly forming minor contraction box. So, and then what else was I going to say? Oh yeah, and as far as the VWAP, so one thing I like to do if I'm just looking at, and I don't even know if it works on silver, but let me just double check. Okay, it does. Okay. So I like to use the VWAP, the anchored VWAP, so that I can move it to whatever point I'm looking at. So having said that, I obviously like to move it to like the extreme lows and the extreme highs. So on a daily, I would put it at this extreme low. You can see it respected it in this area here before coming up, you know, to where it's at now. So on a daily, yeah, if we keep getting silver going up and then it comes back down, by the time this VWAP lines up with that daily and 4-hour demand zone, then that's just another good confluence. It's another good dynamic support and resistance line, much like people use moving averages for. So I personally, I just love VWAP, the anchored VWAP, more so than the moving averages. But that's, you know, that's just me. Everybody's got their own way. So yeah, on a daily, that's one way I like to use it. And then, you know, if we're drilling down into some smaller time frames, same thing. I'll just look to hit some of these bottoms. Now, I don't want to put too many on because it's paralysis analysis, but I'll just kind of look and see where, you know, where it's lining up, like right there. Actually, that one's actually going right through, I think. Yeah. So this low point here, when I put the anchored VWAP down, it lines up with my demand zone where I'm currently at. So I better get in that trade real quick. So yeah, I'm going to go ahead and put one on my broker platform.
You don't want to miss that trade.
Yeah, exactly. But yeah, I'm going to essentially put a stop loss under here, and I'll put my initial take profit up here. So anyway, I'm going to go do that on my other thing real quick while you guys let me know what you think.
Okay, Tiger, just to ask you about how do you move this VWAP on the chart, and which indicator exactly do you use in TradingView?
Great question. Let me just go back and show real quick. Present. Yeah, and this is a free indicator on TradingView. Yeah. So all you got to do once my chart comes back up is just go to your indicators and just type in anchored VWAP right there. VWAP auto anchored.
Okay.
And then you just put a star by it so it puts it on your favorites. But when you do that, well, you can put it up here in the tab, like right there, just like that. So it's going to look like two candles, and you'll see a line going through it. Can you guys see that okay? Yeah, right up here.
Yeah, it's nice and clear. Very nice and clear.
So I just added it to my favorites. That way it's up here with, you know, my fibs and my projection tool, everything else I use. So that's just a quick grab it, throw a line wherever you want. But yeah, again, I just use the extreme highs and the extreme lows, and it just gives a good dynamic support and resistance. I mean, I know that the institutions, I don't know exactly how they use it, but I know they use it. They use VWAP in some way, shape, or form. So I'm just kind of trying to dig into their head and say, well, if I were throwing a $500,000 order on, where would I want to see those dynamic supports and resistance? So they work great, though. I've been back testing the heck out of this, and it, as you can see on that example on the daily, I mean, it just bounces right off. And like I said, over here on the 4 hour, you know, I mean, it just kind of stair steps all the way up. Look at that, touches here, and then currently this is where we're at. So I'm just looking to see if it'll help me out on this trade. So we'll see how it goes.
Nice,
awesome. That's a beautiful, beautiful setup you've got there.
Yeah, get in this thing real quick.
All right, I've got something setting up on Bitcoin right now. I just placed an order on this, a pending order. You've got me up. Awesome. So it hasn't yet triggered. So just a bit of an overview of what I'm looking at here. So right now, I mean, with yesterday's trade, what I mentioned was this initial sell opportunity at this bearish order block. Right. So again, just that bigger picture projection of Bitcoin in terms of what I'm anticipating right now. So there's two things I'm anticipating. Yesterday, my original anticipation is price would trade into this fair value gap, which is already done so. Okay, so that fair value gap right there has been taken out. Okay. And then after trading into that fair value gap, what I'm anticipating is a reaction away from this range. There is a likelihood the market could come maybe a little bit lower today. And we could see price potentially close deep into that range, and then over the weekend we could see the market accumulate. But at some point, I'm anticipating a bullish continuation towards 109,000. So that's my next bullish target for Bitcoin dollar. So that's just more of an intraday perspective, but I like to trade what I see, like in a moment. So what I see, what I saw yesterday was the market gave this initial bearish break to the downside. It's a very classic structure on Bitcoin. I know right now, if you're looking at this just without any sort of just naked, right? One thing that's pretty evident is that Bitcoin is accumulated, right? So this is your accumulatory range from this low to this high, right? It's a very clear accumulation. And of course, like what I would advise with most traders, if you're not used to reading price action, particularly when it's accumulated, is stay away from it. But price action, it can be readable within accumulatory ranges like this. So what looks messy to one trader, for me, I see some sort of order and structure. And the rules of accumulation ranges are very simple, right? Price would always go from buy side to sell side and sell side to buy side. So price would take out a prior high, like in this case, and then it would run for prior low, like in this case, and then it will run back and then take out. So in this case, it came back into this imbalance, took out this previous high before coming back down, created a new low, took out that low right there. So what I'm anticipating now is the market to run towards a short-term high, which coincide with this bearish order block. And then after taking out that high, I'm anticipating a run back down to sell side liquidity pool. And of course, the most recent sell side pool is the low that was created at the start of, literally that was created a few minutes ago. And then of course, you have the low of the day, which was created in Asia. So I'm anticipating price to essentially potentially give a move towards that low, so towards the low of the day. So that's essentially what the very simplistic idea is behind the trade, because of course, like there is the cycle, and right now the cycle on the 30 and the 15 minutes is bearish. So I'm simply looking to trade in line with that bearish continuation. And my pending order is, oops, I'm still on the marker. My pending order is at the most recent unmitigated bearish order block, right? So the most recent unmitigated bearish order block is where my pending order is, stop above the high. And then again, there is a likelihood that price could give a 1, 2, 3. I'm going to be monitoring this. Like for me, the main target is this low, but I want to see how strong a shift is. Price could give a very aggressive shift like it did for gold when gold broke below that daily low. So price could give a very aggressive shift below that daily low. We've seen price tap below this low twice, not only twice, but we have also a relative equal low down here with this low. So again, if we see a very strong shift, a very strong break, then there is a likelihood the price could trade all the way down to this unmitigated. So if we go down to the 15 minutes, there's an unmitigated bearish order block right there. And that's what I'm anticipating the market to essentially find some sort of a support. So that's the general trade on Bitcoin. So right now it's like the market will eventually get rebalanced. So right now, like what I love accumulatory ranges is market is always going to be seeking to rebalance itself at some point in the near future. And then for gold is, again, there's a very specific setup in my playbook for trading reversal like this. Like, so as I mentioned at the start of today's session, I was like, yeah, right now waiting for that third leg to confirm, which it's now done. So price has now confirmed that third low in the cycle. It's in a very strong reaction to the upside, but it's not yet ready. So right, this is now cooking for that sort of reversal trade, that contraction trade that could happen in New York session today. So there's two areas of interest. My first area of interest was this bearish order block. So from this bearish order block, I'm anticipating a rejection. So as I mentioned earlier, like there's one or two possible scenarios that I'm anticipating. There's like one or two structures. First is when the market could come back down, deliver a lower low. And then after that lower low, we could see a final break to the upside, a retest, and then a sort of a continuation. So like break, retest, continuation trade opportunity. Or we could see the market deliver a higher low. And then after that higher low, we could see a break to the upside. And then after that break, a retest and a continuation. Now, in this case, I'm leaning towards the higher low structure taking place. And it's not just based on like just guesswork, right? There's a reason for that. So the price action reason is two reasons. One, I look for little fingerprints of where the market. So it's like price likes to play ping pong. So I've seen the pong. So I've seen the ping. The ping for me is this bearish order block. Now, what I want to identify is the pong. So where's the market going to come back down and bounce off from? So the first area of interest for me is very easy to miss, but it's just the point between these two candles. If we go down to the lower time frame, that point has a very specific meaning. So on the 3 minutes time frame, there are two things at that point that I'm very interested in. The first is the fact that that is where the point where the market breaks structure on the 5 minutes time frame. So on the 5 minutes time frame, we can see the market has given a bullish break to the upside. So on the 3 minutes time frame, price is given a bullish break to the upside, and also the same on the 5 minutes time frame. So that's a point where we've seen the market giving a clear break to the upside. Secondly, the market before giving that break created something called an interchange zone. So interchange zone is a very specific order block as well that I look for, but it only works within the right context. And the context that it usually works in are reversal scenarios. So an interchange zone coincided with a very strong aggressive move in a singular direction, and anticipation of, and at the end of a bearish cycle, at the end of a bullish cycle, is for me usually a good area to trade off. So what I'm going to do, so one of the setups I have in my playbook is this basically. So is where I've seen a rejection, I've seen a reaction on that third leg. I've seen the market traded into the most recent bearish order block, B. The next is price is given a bullish break of structure on the 5 minutes and the 3 minutes time frame, C. Price has formed an interchange zone, D. My pending order goes at the interchange zone with my stop loss going below the lowest low, right? And then I'm simply, so again, this is simply just a contraction, right? I'm not anticipating a full-scale reversal, especially as it's a Friday and the major move has already happened. But what I'm anticipating is some sort of a bullish contraction, which would take me to the low of that daily BST. So essentially, because the market has broken below the daily range, it could just come back and retest what it's already broken. So I'm simply going to be looking to take a long to the low of that daily range. A very simple trade. So it's looking at a potential 1 to 3 risk to reward on this. So what I'm going to do is I'm just going to also place a pending order right there, 2 seconds. All right, so Bitcoin came up. It's now sort of like bounced back down, but we'll see. We'll see if it pulls even higher. I'm not going to chase that. So we'll go on to gold. Right, I'm going to silver. There we go. Yeah. All right, so that's coming down quite fast, which is nice. I like to see fast price action. Usually a very, very good sign. So that's my interchange, looking to go long from the high of the block, low of the range, target the daily SST that was broken. So I'm just going to go back to my daily time frame, just going to correct that level because that's from a previous session to right there. There we go. All right. It's a very simple, straightforward setup. And then just going to create a pending order. 1% buy limit done. Right. So that's that on Go. I'm not sure if you guys had anything else you wanted to add onto this.
Yeah, Bitcoin. Yeah. No, I don't think so.
Yeah, Bitcoin,
we have it.
Yeah, Bitcoin not triggered yet.
What's that?
Yeah. Now Bitcoin hasn't triggered yet. Right now, it's still short, but again, it's just sort of bouncing around. It could very much just keep dropping. It may not retest and mitigate. It could just drop down and retest this unmitigated block, and then we could see. Because again, that the stronger bias I have for this right now is to the upside. So the selling is a little bit more on the risky side. It's just trying to like grab like a 1 to 2, 1 to 3 as like that exhaustion of this bearish contraction range. But for me, the true move is to the upside. So what I'm anticipating now is potentially over the weekend, this could happen is where the market breaks below these equal lows. And then after breaking below these lows, we could then see, obviously after that rejection, we could then see a break of structure to the upside and then a retest. And then that would be the beginning indication of that sort of like bullish continuation towards higher highs. So that's what I see right now. So this is a very I'm not sure if you guys have heard of like an AMD model, so accumulation, manipulation, distribution. It's very similar to So Wyckoff has a very similar model. So that's kind of what I'm anticipating on Bitcoin. It's an AMD model. So if I go back to a second.
Yeah, that's essentially what I used with the master pattern. It's really an indicator that came out of the Wyckoff theory and accumulation distribution.
Right.
So it's powerful stuff.
Yeah, exactly.
I mean, it's a great way to show you, or it's a great way to see if you're buying undervalue or overvalue. So
absolutely,
because I use it in conjunction with supply and demand. So it's just like a 1-2.
And exactly. So it works beautifully in conjunction with supply and demand. Supply and demand are variations of order blocks as well. So
exactly.
you cannot just use it. You cannot just use it on its own. Like one thing I realized when traders learn about AMDs, they're always trying to look for AMDs, which is like AMDs wouldn't always happen. Before an AMD, you need a period of accumulation. So like in this case, and then after that period of accumulation, the next move typically is the manipulative move away from that range. So right now that accumulation has taken place, I'm anticipating that bearish manipulation to the downside into a key area of liquidity. So again, it has to go to an area of very, very important supply. And then after that, I'm anticipating the distribution to the upside. And in this case, the distribution will be in line with distributions are almost always in line with the higher time frame. So again, there is like that sort of like higher time frame context that should flow into that lower time frame price action.
Yeah, and the best part is on TradingView, it's a free indicator. If you want, I can actually share my screen with you real quick.
Yes.
Oh, please. Yeah, go for it.
Show you what I use because I don't think I've shown you two since I've been on stream. So let's do that real quick. Excellent way to figure out if you're under or overvalued. So yeah, I mean, if I turn off my order block tool real quick, that's the master pattern indicator. It's really just a derivative of the Wyckoff theory and, like I said, market structure. So it just gives you an actionable way of using it. So let me turn off my order block on my daily. So we've got the blue boxes are the major contraction points. Okay, so it just means leg out on the top side and then leg out on the bottom side. That's what turns it blue. A minor contraction box is the orange one. So that's where it's moved up, but it's just yet to come down below it. Yeah. So, the theory is obviously the big banks push up and to collect liquidity, push down to collect liquidity before ultimately finding their trend phase, which is the same thing as accumulation distribution. So, so one thing though is when you see a major contraction box on a daily, the goal really is to try to get into that trend fairly close to when it actually broke above, just as an example. So in other words, what I mean is by buying up here, like I've got my limit order set, my buy limit order here, or stop market, I'm sorry. It's higher away than obviously trying to buy down here. So in other words, the farther away from the box you go, the lower the odds are, the lower the probability is of your
probability.
So for me, I like to look at it on a daily, but when it comes to my smaller time frame, obviously I personally like to use the 4 hour for my demand zones, but I like to go down to a 1 hour and even a 30-minute to see if I'm undervalue or overvalue. So, right now it's right on the value line for 2 straight major contraction boxes. So it essentially can act as a support as well. But I ultimately like to be under. So on a 30-minute, there's where a major contraction is, broke below, broke above. So theoretically, anywhere under here that I buy is undervalued related to that most recent contraction point. When you see, like I've got here, I've got another one further back in time, that can essentially be a way of using a stop loss. If you're getting into the order up here somewhere. So, but it also acts as a dynamic support resistance. So, and as you can see, this is just kind of bouncing off that line right there, and not to mention obviously the demand zone, which I'm looking to buy. I've already got my limit order set. So, as far as gold goes, I mean, if I get up to this area, then my order is going to trigger and I'll be in that. But yeah, I like it because I'm undervalued in relation to the recent contraction points.
Exactly. Yeah.
So love it. Love that. I love that indicator. Good stuff.
But that's what's that indicator called?
Oh, it's let me just go back. Sorry, I should have.
Pattern.
Yeah, master pattern. So if I share my screen one more time real quick here, whenever it comes up. Yeah. So it's the master pattern indicator. Actually, the easiest, let me see here. I think I should be able to put it in the comments here. So let me, master pattern. Yeah, right here. So here's what I'll do. I'll just copy that. It'll kind of show how it works. And then I think I could put it in the comments. Let me see. Oh, I can't do it in the regular, but I can do it in the private chat. So I'll just put that there because I think I shared that with Richard yesterday. Let's do this. Copy.
That's awesome. I'll definitely take a look at that. But one thing is, like, there was a time when I had all kind of indicators of my charts. But as of my recent years of trading, I've tried to go as naked as possible because now it just allows me to focus more on price action. And like the only indicator I have on my chart now is the 800 EMA, which acts as an area for me of a dynamic support and resistance, very similar to the VWAP. But like I used to have a lot of indicators. I never realized that like price, like for me, reading price action actually comes quite easy, and it's something that like having less stuff allows me to focus more on what price is telling me in the moment, and sort of like to go with that.
Yeah, I prefer the naked charts too. I mean, really, that's the only two main ones I use is just the master pattern and the order block. Because I mean, like I told the guys yesterday, I mean, my first 10 years of trading, I was just manually mapping out all my supply and demand zones. But it's just nice to be able to, if I just turn off my master pattern real quick. Yeah, it's just nice to just be able to turn it on and see them at a glance, because then I don't have to necessarily go and put my rectangles in anymore and push it out into the future. I can just go down to whatever time frame that I want to look at, and they'll just all populate.
And it's there. Yeah. That's really cool. That's actually pretty. Really, it's a very efficient tool.
It is. 100%. It saves a lot of time.
Yeah.
A lot of time, but yeah, I've got that limit order in, so we'll just see if it triggers on silver.
Yes. So guys, I can share a screen just to show you what I'm looking right now. Two things that I want to show right now, just to remove some things. So the first thing that happens that I just want to share is related to the British pound dollar, because there is a half hour passed after the US Open and we broke the trend line. So the British pound dollar is going down. British pound dollar is going down very near to this trend line. Maybe this can go through this, and in that case, there is a high probability that in Monday we have a little bit bearish day for euro dollar and British pound dollar, and the bullish push for the US dollar index just for the recovery. So I will keep my trade. I will keep my sell British pound dollar order, and I will try to see which target I can reach. I would like to see 1.366, but I will take what markets gives me. So I will wait for that. Anyway, so right now on the chart, I have a choppiness index. This is one of the indicators that sometimes I'm using that just to know when to avoid trading, So I would just give you one example. So today, for example, Japanese index is very, very simple. It's use a logarithm for the average true range. And if you are above 50, that means that you're in choppy market. If you're below 50, you are in the trend market. More down, bigger trend. More up, bigger sideways. Really, really simple. And as you highest level, because we were, I think, more than 12 hours in the range of the 30 pips, and nothing happens. So we just moved from the 1.372 to 1.3745 and just move 12 hours around that levels. And this is why that happens. And right now we are starting to go down because side just right now. So this is something that I very often use as an indicator. And one indicator that I use occasionally, just to figure out the market and not to miss something, is one of the indicators that I really like is a retest indicator from Algo Alpha, breakout and retest.
Got your own indicator.
So that indicator, it works very, very simple. It's finding the support and resistance levels, some important price levels, and wait to market to retest. And for example, we had this is British this morning, and then we has a push of the 4 bullish candles after that, or we can go maybe on 4 hours. It's not 100% accuracy, it's just an indicator, but sometimes it's very good because you can see some important price level that sometimes you can miss, you cannot see, and that is sometimes I will just go to the NASDAQ and long when the market is a little bit bearish or sideways. For example, look this. This was the June 5th, and we had a few a half day of the big drop in the stock market, just to the simple moving average, and then we touched that important price level. We got a bullish, and this is the good thing after some drop. And this indicator sometimes help me to find a nice level to enter into trade after some kind of the drop. And this is the very easy to do usually, because if you analyze the stock market and indices, for example, 60% of all days during the year we are bullish, and only 40% of the days we are bearish. And there is always bigger chance, if you just trade on that logic, that you can be more profitable if you make buy orders in the industry markets. So because that's the best companies in the US. So this is the something that I just wanted to share with you. And this indicator is very powerful if you use on futures market. I will just show, for example, this is the British pound dollar futures, and what you have the real volumes, and then you can calculate that volumes, and then you can know if the volume is bigger for that zone, that support resistance is more significant, and usually bigger push you will have after that. And sometimes I like to watch that and to use in trading. So it can be very, very interesting. Either not just on the 4-hour chart, you can use in the 1-hour chart, for example, as well. You can find interesting levels. For example, look this. We retest him, and after that, everything changed, and we start to go up again. Morning, this is the something that but it's good to make a combination with your perception, your scenario, your bias, and everything. And this should be only additional trigger or to find some good level. Nothing fancy, nothing more than that. So it's a great tool. But guys, I just hear from you. You're absolutely right. We should avoid to have too much indicators on the chart. Naked chart and 1 or 2 indicators just enough. But sometimes when I do analysis, especially if I do during the weekends, I can use this indicator just to find important levels, because we will again retest that level. We will retest this level maybe a couple times in the next few days or weeks. So it's a good just to know which level is that, and to wait other time for the reaction. For example, right now British pound dollar can go down, and we can have the whole day down, and in one moment we can create up. So this level here, which was support, now will be resistance, and maybe we will retest and go down again, and maybe we will break and go up again. So it's good to know. And sometimes very often I miss some levels. I don't the chart.
Yes.
It helps to sort of feel the gaps. There are times when your eyes may not see something, but of course that indicator can help you to sort of see what you may be missing. By the way, this pound dollar looks like such an amazing opportunity to sell right now. There's crazy divergence on the RSI, and you mentioned as well that euro dollar gave a higher high. This didn't give a higher high, which is an example of SMT divergence. It's just like you've said a few things. This is something that if I was to trade in FX, I definitely would be lined up to be selling pound dollar as well, because like the price action, a lot of price action confirmation just lines up really, really well with the short.
Yes. But there is one problem trading on Fridays, and this is the problem that I just journaling every single Friday for myself. So on other days, they can happen that we touch some low and we end the day with that low, and then last few hours of the Friday we start to go up, and we finish the day in the middle. You will see how many dojo candles we can find on Fridays, for example, and how many candles. Just you see that you're not on the low, you're not on the high, you're somewhere middle. And this is why I do not have so big expectation from this trade today. I know we are pushing low, we have a bearish divergence, we break the trend line. I know maybe it'll be false push up or down, but I know that maybe this day we will finish somewhere in the middle. So no problem. I will keep my trade for the Monday, because in Monday I will expect to see continuation of that bearish trend, just because we didn't hit the target from the Thursday. And this will be my guidance for this Friday.
Fridays are always one of those days where the market can be, especially as it goes closer towards the end of the market, it can be very temperamental. That's why I used to have a rule where I didn't take trades on Fridays, but now my rule is if I can get a nice trade. That's why once I see a nice trade early in Asia session, and then out of the market in profit, I don't attempt to take anything in London or New York, because I know that the more I expose myself to the market on Friday, that it increases the likelihood of me being sort of in a chop that could hold over the weekend, and then on Monday we could see a move away from that chop.
Yes, nice thing. I remember I was working in one prop company a decade ago, and on the wall there was a message, and that message was do not buy Friday's high, do not sell Friday's low. And that was on the wall. And I remember that because a lot of traders they pushed their trades during the Friday and just went empty hands. So this is why we just need to be, either outside, either if we catch some high for bearish move or there's some low for the bullish move, and this is it.
Yeah, it makes sense. I mean, a lot of people are taking their profits, so
exactly. People are taking a profit. They're getting out the market for the weekend.
Yeah.
There's a graveyard of traders that have tried to catch a big, the lows or the highs on Fridays, and they failed, and they've given a portion of their weekly profit away on a Friday. I was there in my early days in trading. I did that quite a lot. I would have a nice week, and then on Friday I'd give all of it away. And then I was like, okay, that's a problem. So I started finding a way to prevent that. I stopped trading on a Friday, but now I'm at a point where I can trade on a Friday without risking doing that, because I understand it's also a psychological thing as well. Like, it's understanding that the psychology of trading on a Friday is not the same as the psychology of trading on a Wednesday or a Thursday or a Tuesday. And it's like when you tap into the psychology of the market movement, then it also affects your behavior. Like little things like, oh, I've seen a trade on the morning, I'm not going to take a trade in the afternoon. So you kind of know when to sort of like step away and just sort of like be like, okay, nope, this is not a trade for me today.
Yeah, it'd be a good reminder. It'd be a good item to put in everybody's Friday calendar, so it alerts at you. Do not buy the high. Do not sell the low.
Do not buy the high. Do not sell the low. No. As common sense as that sounds, is not common practice.
Yeah. Yeah, I mean, it really doesn't matter what you look at. You always get those spikes. So,
yes.
No, that's a good one. Well, I got into my silver trade, so we'll see how she blows. I'm on obviously the higher time frame, so I don't mind holding it over the weekend. But
I was the silver. I was a performance doing right now on it.
It's just kind of going. I mean, it hasn't really moved yet. Hasn't really been in very long. It just got in about 5 minutes ago. So. Yeah, it's just right about the same spot right now.
It's chopping around. I've just shared my screen, by the way. So gold is about to trigger my pending on this long position. So we'll see how this rolls. Come on, baby, just a little bit more, and we're good to go. More. And the Bitcoin kind of decided to run away, left me behind. It's like, nah, I'm not gonna tag you in on this one.
Yeah, just tease
you. You're on your own. You just tease me and then ran off. It happens from time to time, you see. You just got to let it go.
Just
never chase.
Replace, don't chase.
Exactly. Replace, don't chase. That's the rule. So I think with this, I'm gonna leave it until like after. I used to trade Bitcoin over the weekend, but my girlfriend had too much of a go at me for doing that. She hated me for looking at charts on the weekends. Like, it was meant to be our time together. I was like, oh, you know what?
Yeah.
I will stop trading on a Saturday.
I did the same thing for my girlfriend. Quit looking at your Forex.
Quit buying new shit all the time. Maybe I'll stop looking at it.
I tell her, I said, Forex is closed. I'm not looking at Forex. I'm looking at Bitcoin.
Exactly. I'm looking at Bitcoin. Get your markets right. Or quit looking at stocks. I'm like, I don't trade stocks. What are you talking about?
I'll be on the couch.
Yes. The same story is with me. And sometimes I monitor Trump tweets because he moves the market. And that's insane sometimes. Yes.
My girlfriend picked on me. She's like, who are you cheating on? Who are you cheating with? What are you looking at on your computer? Don't worry, I'm too nerdy to do that. That's just trading.
Well, you are technically cheating. You are cheating with the markets. You are giving it more of your time and energy and devotion and affection as well. And where that emotion and affection comes in, that's where the cheating takes place, man. It's emotional cheating. It's emotional.
You ain't cheating, you ain't trying.
Yes.
Oh Lord.
Nice.
Wow.
So guys, we're end of the session right now. So I just want to thank you for this nice and thrillful session today and nice setups that you just show. Thank you a lot, Tiger and Walter, and I wish you the great weekend. And Robert and others that
Thanks
you
a lot,
watch
guys.
this live session, I want to have a beautiful weekend. So this is it, my guys. We will see next week.
Adios.
See you all next week. Okay. Have a wonderful weekend, guys.
Okay.
Right.
Bye-bye.
Have a good one. Bye.
Bye.
Jannie, you are muted, I believe.
Well, that's a good thing because I was slagging you off big time.
You never muted it before.
Oh, gosh.
How's your gambling addiction, Mr. Gallo?
Non-existent, my friend. Non-existent. Luckily.
You want to talk about it? You want to talk about it?
Yeah,
No.
I think that's what this session's going to be about entirely.
All right. Well, how was your trading week? I can tell you how Paul will know how my trading has been. I haven't really placed any trades on a from a personal point of view. I placed a couple of crappy trades during the session, but I made it clear it's not good trades. How about you? How was your week in terms of setups? How did you find the week? Because you just look at that one market, right?
Yeah. So for me, it was pretty good. I could have executed better, especially today. But overall, it was good. I saw the market super clearly. It was just I was a little bit too picky with seeing my levels come into fruition, and then feeling that sometimes you get that feeling to chase a little bit, just a little bit. The stop loss reward still makes a little bit of sense. Like you can still get roughly 2-to-1, but it's still not your optimal entry. And I think that what I had to learn from this week was I chased a tiny bit, which didn't give me as best of that ratio. And so I calmed down, and I already had lower position size because I wanted to go into this week just trading with a lower position size. So, but it's been good.
Yeah, I mean, you just mentioned about you were a bit too picky. There's nothing wrong with that. I think it's like, sometimes it just doesn't come to you, and if it doesn't come to you, it doesn't come to you, right? You just wait until it does come to you, and it will. Maybe not today, but next time when you identify a level and that's a very good level, you'll get it. Right, and then those are the trades. But for me, like this week has not been very. I just couldn't find any decent opportunities. But I saw the NASDAQ. The NASDAQ just broke through that all-time high and just hasn't looked back.
That's crazy.
Right? Yeah. So I was hoping for a retest, but we were pretty far away from. Well, not that on the 4-hour. I think. Let me share my screen. So we can have a look at the NASI. Welcome to all the viewers, both of you. All right. So yeah, it's the breakout, right? This is the all-time highs. This is a breakout. So I don't think it's. I actually like these kind of arcs, right? If we can get like a pullback to that all-time high support level, that would make for a very, very good setup. But that could take a couple of days, maybe next week sometime, because this was it broke out on the 25th, 2 days ago. So it could, if we can get like 2 or 3 days back to the support level, then that would be a very, very nice level for an opportunity to go long for sure. And who's here? Yo, Robert, I'm about to leave for work. Oh man, sorry to hear that, Robert. Yeah, so that would make for a very good opportunity. What do you think of that, Mr. Gallo?
Not bad, I believe. But the only thing I'm concerned about is when I look at, instead of the continuous chart on the NASDAQ, when I'm looking at the NASDAQ September contract specifically, we are essentially retouching the highs of the September contract. So I'm kind of hesitant because I think the cash markets and the future and the continuous chart on the futures markets, especially for both the S&P 500 and the NASDAQ, they're a little bit in argument with each other. So which high you want to believe is I think the game right now. And but regardless, I think that a little bit of a pullback on the NASDAQ by, let's say, on the U25 contract, it would be about 200-ish points or so where we would like to see consolidation before another move upwards. That would be nice.
Yeah.
to get long.
And how do you typically find Fridays? Do you typically?
You broke up there a little bit. What did you say? Sorry.
Really?
It was just a tiny bit. Yeah.
Hello.
For me. Oh,
Hello.
I hear you now. You're good. So, were you saying how do I typically trade on Fridays?
No, do you typically trade on Fridays or not really?
Yeah, but it's definitely one of my lower volume days, if anything. I'll probably take one really good setup if there is one, and if I'm lucky to, like, if there's one in the morning and then one in like the last 2 hours of the session, like 2 to 4 p.m. Eastern time, like I'll consider it. But aside from that, no, usually it's a lower volume day for me.
Yeah, I mean, even in the Forex markets, see, this is the 4 hour. You can just see the type of day we had today, right? It was just a very slow sideways range, and now we're starting to very slowly break lower. But it was very slow. I know there are people who avoid, actually quite a few traders, they avoid trading Mondays and Fridays. For me, Mondays are not that bad. Fridays to me are worse than Mondays. So I would trade Mondays, but Fridays on the future side of things, just the first hour and a half. That's it. After that, it just kind of the volume dries up. I don't know. There's something about Fridays. It's just not. Even in the Forex market, unless there's, it's not like always like that, but it's like that most of the time.
Yeah. On average. On
balance. That sounds clever. On balance. Yeah. So yeah, I don't particularly like to trade on Fridays. But yeah, again, on the future side of things, the first hour and a half, just but well, like I just said, like even when you trade the first hour and a half, it can be just really slow. Like this, the market's open, it's like nothing wants to happen.
Yeah. Oh yeah, definitely. Today was not that day, I will say. So that was nice, but it was just basically almost straight up within 10 minutes of the S&P 500 and the NASDAQ and everything. So. But yeah, usually it can be and also if it does depends on if it's closer to the end of the month, if it's the beginning of the month. There's different time periods, and like different news events and stuff. Today we had that China US news deal confirmation that there was some sort of trade deal that occurred. I do not know the details of it yet. So, and then it's possibly a EU deal or something. So maybe the markets are getting into a little bit more optimism based off of some of those headlines. And then on top of that, core inflation this morning, there was some core inflation data that came out that was a little bit hotter than expected for the US, but I guess nothing that the market's too worried about at the moment. So
yeah, look, you are in the US, so it will be great to get it directly out of the horse's mouth, so to speak. I'm not saying you're a horse or anything, but like how's is it like true, all the like inflation? Is everything getting more expensive? Food and everything else? Is that like a real thing?
So I think what most people would agree with is yes, it is, but it mainly happened in that I think probably for most people in the world between 2020 and 2022, there was like 2 to 3 years of time that inflation spike caused roughly many goods, almost all goods to appreciate by anywhere between 20 to 30% just as a baseline. So now inflation is down closer to between, roughly around 2.5%, but you're looking at just baseline prices much higher because of that initial spike. And so things are just more expensive, which means wages need to go up, which means there's just a whole spiraling of effects to keep the machine running of sorts. But But yeah, I mean, now at least inflation is cooling down a bit, but it's cooled down quite a bit, but prices are still skyrocketed since there hasn't been actual deflation to offset that 20+% inflation from a few years ago.
Yeah, you know, I saw this Netflix thing. I don't know if was it a series or it's not a movie, definitely not a movie. But I was just like surprised to see like how many people live in their cars in the US. I was like, what? And they have full-time jobs, but it's just too expensive, right? And I suppose that depends on, you know, which state you're in and so on. That definitely must play a role as well, because I don't think.
I would think so.
But I was just like really surprised that someone that goes, wakes up early in the morning, goes to a job, full-time job, works till 5 p.m., and they can't afford a place to rent because it's just too ridiculously expensive. And I think and I thought, oh my God, that's so wrong. Like if you have a full-time job, you should be able to afford a place, right? Maybe not your dream home, but definitely a place to live in.
Yeah, I
and
mean,
not your car.
Welcome to the world, mate. I mean, and obviously, the United States is very different depending on. I mean, it's 50 mini countries really, and obviously you go to LA.
Yeah.
There's lots of problems with homelessness, right? You go to New York, prices are sky high, so of course you're going to get people. But it's an issue, and of course, and this is the problem with we're talking about prices. I mean, when they go up, they're fast to go up, but very slow to come down, and that's part of the issue. Which I mean, for me in the UK, it's energy bills. The US, last time I checked, is more just everyday goods are just out of reach now for a lot of people, and it's extremely challenging for people. So it's very. I mean, what did you watch on Netflix, which reminded you of that? That was the thing. You started with Netflix.
We were talking about inflation and everything getting more expensive, and that just reminded me of, how people. I don't know. It just went down that way. I don't know.
You're thinking of like a Dustin Hoffman movie where he gets out of the back of his VW van, wakes up, and goes to
No, but it definitely wasn't a movie. It was like a documentary thing. Movie.
The car thing is interesting. I mean, I think a lot of people like seeing there's also a lot of content creators that do that too. They do challenges of oh, I need to save this much money by just living in my car and doing DoorDash and all this other stuff or whatever. And so a lot of people then started turning that into van life and all this. It's just becoming kind of not like a fad. Maybe it is a fad. I don't know. But amongst the younger generations to try and downsize and be able to travel, etc., and minimize cost, get their lives kind of in a budget order of some sort. I mean, kudos to them for doing it, because that's a tough life to live day in and day out for months on end, if not years. So
I mean, there is a big nomad culture, and a lot of Amazon workers who will go from warehouse to warehouse, from state to state, where the work is, and they'll just travel and they go with communities. I remember there's a film about it, and it's fascinating, and it's quite a romantic kind of outlook on the surface, but living it, I don't know, what would that be like?
No, I don't know. But at the same time, it was a documentary, but it could be it's not really something you see very often. I don't know. You'll know because you live in the US. I know. You know what they like. Or what it can be like. They focus on something that's not really a big thing, and then they just focus on look at this. See, here as well, and it's happening here as well, and it's happening here as well. I'm oh my God, this is a crisis. But really, right?
Right.
But maybe the reality is nothing like that. So
there's just a spotlight on the minority, and then
very small kind of group of people.
It's I'll tell you what, anybody doing that in Florida, where I am, holy, that's brave. I mean, because you're dealing with the heat, just dealing with the heat. That's literally, you could be in a crisis at some point, probably living.
You're gonna cooked. You're gonna be cooked.
So, but I think it's a little bit sensationalized, probably.
Yeah. Yeah, Florida. That's a big state. Is it a state, right?
Yeah. It's a huge. It's very large. It is larger than, like, if you were to go from the Keys, which is the tip, all the way to the western edge of the Panhandle. That is a long drive. You are looking at literally like 15 hours of driving.
What?
Just to get, yeah, if you wanted to go from one edge of Florida to the other, it's
Oh
crazy.
my God.
But
yeah, I think that's pretty much the size of South Africa then. The entire country. But I think the US is pretty much the size of the entire African continent. You know?
yeah. In terms of like square footage or square meters.
Pretty big. Yeah, well, like you say, Paul, it's basically like 50 countries.
Yeah,
it's like 50 countries with one president. Damn, that guy is powerful.
Yeah, dude, it's kind of weird. When especially when you start looking at it geographically. I mean, the United States is. I think that people do, like, I think some people internationally will look at the United States and be like, how do you not, like, just go to a bunch of different places? Like, how do you not travel, like, to, like, so you live in Florida, why don't you just go to, like, Chicago, like, for vacation? Well, it's like, because it's like a 20-hour drive or a 3-hour flight. And then, so it's a lot.
I wonder, there's probably, it's very different to anywhere else in the world where, most people, when they, travel abroad. But in the US, if you're an American, there's no need really, right? Because you can just fly to the next state or a couple of states away. Or when someone says, "Oh, you're not that far away, only 13 hours drive. That's not that far." It's like, what?
Yeah.
Oh my God. Damn,
I'm flying everywhere. I rarely drive. I'll only drive if we want to go somewhere in Georgia, which is like bordering us, or like South Carolina, which is then bordering the northern side of Georgia. So aside from that, like I just did a quick little route to go from Key West in Florida to the Panhandle, the city of Pensacola, all the way on the western edge. It's about 13 hours, and that's assuming you hit very little traffic. So pretty crazy.
Gee, yeah.
Pretty crazy.
Well, I've actually never been there. I know, Paul, you've been there. It sounded like you had a great time. I'd love to go there.
Georgia was my base camp, and I loved it. I mean, it wasn't the summer. It was September, back end of September. I loved Georgia. Loved it.
Yeah.
Georgia.
Atlanta. I mean, fantastic. Love it.
Yeah. Is that would you say that's the favorite place you've ever been, like in the US, out of all the places you've been?
No. I mean, look, I mean the Grand Canyon, I mean, San Francisco, the Golden Gate Bridge. I mean, Seattle was amazing. I mean, it's just too many wonderful things. I didn't see enough, but it's just like what the American experience for me is a combination of having a coffee, in San Francisco Bay, having my motorcycle pulled out of a puddle by some Texas farmers. I mean, it's all part of the experience, right?
Yeah, I mean, that sounds awesome. Well, I'll definitely come and visit you there, Mr. Gallo, and we can go and gamble or something.
The invite is open. We'll try and avoid the gambling as much as possible.
Yeah, no. All right, what were we looking at? Oh, yeah, the pound US dollar. Yeah, I was just basically pointing out that we were stalling after that rally. But based on where we are right now, we'll see what happens next week. But I don't think this is a particularly good spot to do anything. If anything, a correction is more likely than a continuation based on where it is right now. But I haven't really looked, and I've probably done the viewers a disservice by not really doing analysis the way I usually do it, because I'm backing off, and my analysis is always also at the same time backed off. So apologies for that, guys, but I'll be back. I'll be back. No, but because I saw on the dollar index that there was a beautiful breakout in the retest, and that would have given me Well, that would have made me pay attention to the pound US dollar for a much shallower pullback. But I didn't look at that because I already made the decision I'm not going to trade, you see, so that's why. But anyway, based on where we are right now, I do think we can, it's likely that we're going to get a pullback first before we're going to continue higher. But I do think the pound US dollar is going to go to the 1.42 level. That's a level taken from the weekly time frame. Unfortunately, I don't have the chart. Maybe you can see it over here. Let's have a look. No, unfortunately not. But anyway, I'll show you next week. Today's Friday. We typically slow down on Fridays. We take it easy. The big easy. We call it the big easy session. Isn't that right, Paul?
I mean, we're calling that now. I mean, like
What?
today, we're starting it because that's the big easy. I mean, that sounds great. But I'm like, I haven't thought that before. The big easy. What does that mean?
Maybe not the term. But usually on Fridays, we kind of just wrap up and speak about what happened the week and so on. That's what we do.
The BES, Big Easy Session. That's the new title of this.
Big Easy, yeah.
So for that GBP trade, that GBPUSD like look that you have, if you were to, would you look for more of like it to maybe just touch that level and then get long, or do you want to see it go through it, consolidate, and then see the move higher and then get in?
You know, I think this level is now gone because we did get a pretty decent retest here on the 1 hour. As I've mentioned, if you look at the dollar index, which I don't have open, I'll open it we can come back to it later on.
Yeah.
But you see that was, look at just how beautiful it retested it, yeah. And with that engulfing, and then it took off. So ideally, I wouldn't want it to come back here, right? It can maybe come back over here. Does that make sense?
Yeah, no, definitely.
But not back here, because then you get that the big man leaning against the door. That's how Paul kind of explains that, right? Which is what we saw on gold, for example. Was it this one? Well, I don't know. But anyway, so this was gold that we looked at this whole week, and it found support here, and obviously we did get a bounce off there. But you see, when you get these type of support levels, they're not as good as because just think about it like this, right? If you get a level coming, or there's a pivot here, or how can I put it? Like a pivot, and it traces away from it, comes back here. There's a support level. That's not the same as price breaking out of a resistance area and retesting it. Obviously, right?
Yeah.
So when you get a pivot like that and comes back to this pivot, it's usually, it just means that this has now been weakened. It depends on the context, obviously, and the bias and everything else. But the bias for me was not really strong based on, if you just look here, to your left here, it's not really, you're not exactly making high highs or lower highs or anything like that. And it wasn't really easy to identify a clear trend line either, except for maybe this diagonal line over here at the bottom, but definitely not at the top. It's a little bit all over the place. I could probably delete this here, right? There's no clear kind of touching points that you can connect, right? It's a little bit all over the place here. So, but here at the bottom, you've got two clean touching points, and then that was the third one. And there was a confluence with this support level here. So a bounce off here, but not really like a very good opportunity because of the fact that there's no real strong or clear bias. I still feel like, even though the dollar index is declining, that gold has just been massively overextended, right? It just moved so far to the upside since the beginning of the year. That 35 level, 3,500, right?
Yeah.
So it's just been pushing in one direction since the beginning of the year. So massive moves. And prior to this, the beginning of this year, gold was moving up anyway, right?
Yeah.
So, and then it just like exploded. So, yeah. So even though the dollar index can continue to go lower, I don't think because of the extension that we had in gold, it doesn't necessarily mean that gold is also going to continue to go up. Right. So it's going to be important to look at the technical analysis. But yeah, we now broke this diagonal trend line. So I think, if anything, a retest of this level here for a short would make more sense than anything else. Okay. But again, not for a big move or rally or anything like that. If we can get a retest, then I'll probably just target this low. Yeah. Right.
Yeah.
So I don't have a longer term view compared to, say, for example, the pound US dollar. I do have a much longer, a much stronger bias there for a much bigger move to the 1.42. So that's 500 pips away from here. Okay, so it makes sense. So you've got a really strong bias, and for a much larger move over that can play out over 2-3 weeks, maybe even a month, and that could give you multiple opportunities over that period of time. I don't have that at the moment with gold. Okay, so so what the bias at the moment is very short-term short selling position. So a retrace to this breakout level, or perhaps even let's call it this little pocket area, right? So it can retrace, or maybe even slightly above that, because it could find it retested this level here, or perhaps even this diagonal line, right?
Yeah.
So those are two areas. So it's just going to be a case of looking at how price action behaves at those levels, and then just play it accordingly. So at least compared to, for most of this week, now I think okay, if we can get that retest, I will go short, which I wasn't able to say for most of this week. Buyers don't know. Is it going to hold support here? Don't know. Okay.
Yeah.
Because if it does trade away from here, where could it go to? Just maybe this neckline, which is, let me just draw this neckline a bit proper. Yeah, you see that neckline? So you break here. This is the support and that diagonal line. So you're taking a long, and your target should be this neckline here. Mm-hmm. Do you see that? You can't, there's no strong bias that can allow you to, or not allow you to, but that would make you feel comfortable to trade for a bigger risk reward ratio, or target a much higher area of resistance, or perhaps even a higher level than that. Okay, because the bias is just not that strong. Yeah. So pretty small kind of potential trade to that level. But now it's going to be the same. I think it's going to just be like a retest, and perhaps target just smaller kind of moves, smaller targets for gold in the short term anyway. And
I'm on board with that. I'm on board with that 100%. I like the retest of that support line right there. So then maybe just go a little bit above it and then fail, and then as soon as you see it failing, jump in short and put the stop above that high that was just established for the failure. That would be my play if I was looking, and obviously buy a short for sure because of the current trend at the moment, not the longer term trend, but the smaller trend.
Yeah, I agree. What do you think of this, Paul? Do you have anything to add?
No, you're spot on. Really, it's just like when we drew those lines, right? This is exactly the scenario which we wanted to provide context for, right?
Yeah.
To highlight the fact that so this seems like an ideal level, but now we've got those lines. Of course, it's there in our way now, and it makes it complicated. So it's just trading this week, man. Just trading this week.
Yeah, it truly does sum up this week for sure. But sometimes you just need to kind of step back and just say, whoa, hang on, this is not really what great opportunities look like in the first place. The conditions look very different. So there's nothing wrong with just stepping back and just break even, right? If you don't trade, you break even. It's a great result to break even. Most people struggle to break even, right? The people who do break even are people who don't trade or have never traded. Oh my god, yeah. So no, so but the point is like when the conditions are right, and you know, when we spoke about this several times, like a really good trade is just like it's screaming at you. It's like you look at it and you go, "There's absolutely no way." Of course, there is, right? But when you look at it, you're like, "There's absolutely no way this trade is going to fail." You know what I mean?
Yeah.
I think you just
it's
look at
waiting for those ones. It's waiting for those ones, and that's the thing, and that's where discipline comes in. You know,
yeah.
and it's a very difficult thing to be like, I'm a trader. What have you traded today? I haven't traded for 5 days. Oh, why not? Are you busy? Well, there's no good opportunities. Okay, you're not a very good trader. I mean, it's like, it's this weird thing which is constantly going on. It's like in the zeitgeist, it's like the most epic traders are the ones which are like driving their Lamborghinis and like trading the phone when they go, I just made 100.
Yeah.
That's just not what it is.
Yeah.
So
it's not exactly how it works. It's not how it works. Yeah. But you see, but this is exactly the thing. So that's exactly how I feel about gold, and even the pound US dollar for a while before we broke out of that this range here. Where was it? Oh yeah, you see this messy area here, right? So that was this level here. This is the weekly resistance that it broke out of, and it came for a beautiful retest, and then it went all the way to that resistance. Okay, so that if you took that trade, that's a 1-to-4 risk reward ratio trade. But then from that, now once you've hit your target there, now what? Because your overall bias is still bullish. So I mean, can you short it? Yeah, you can. What's your target going to be? Are you going to target this? No, because that's the weekly retest. You're breaking out. Your bias is long. So from this point, really, yeah, it starts to become tricky. Right? Yeah, it becomes very tricky because now it's like, oh, you have to stand back. You really, ideally, what you want to see is you don't want it to come back down here to this weekly resistance or support because it broke out. That's obviously support. It did come back down here. And I thought, you know what, we can probably see lower levels, but we didn't. We just like pushed straight back up and we broke that high, right? And then that's the retest, and now we continue. But this area here is exactly the type of areas that you just need to stay away from, right? It's just very, very, very tricky to trade, and you can get chopped up. And it's just best to stay away, really, right? So, but we broke out of this now. So this level here, the 1.364, will be a level of interest for me next week, and hopefully we find support there and continue back to the upside. You could just target that previous high there, and that should give you a very decent risk reward ratio, depending on the entry criteria. And it could be, hopefully it would just be like a very clean touch and a clean bounce. If you can get a nice inside candle or some sort of hammer candle or engulfing candle coming off that support, that's beautiful. If you don't get that, then you can look for patterns on smaller time frames, like maybe a double bottom or mainly a double bottom. Sometimes you get like ascending triangles and so on, but it's usually lately definitely anyway, it's if I don't get something solid on the longer time frames, it's usually a double bottom, not necessarily flat, but where that you make that low and then you get that second low with that divergence in price. It's pushing up, it comes back down, makes a higher low, and then that's when it turns. So that would be definitely a level of interest for me, the 1.364. 1.364. Yeah. Anyway. So that's the pound US dollar. And then Bitcoin. We haven't looked at Bitcoin. Yeah, Bitcoin is doing nothing. It's just back at this kind of that support level, and it looks like it's getting a bit heavy, right? So we'll see what happens. But Bitcoin also is also in this mess right? It's just not a clean chart. So I would like to see a touch here on, off this diagonal line for potential short, and also not targeting, big, like a big risk reward or anything like that. Maybe just back to the support level, and that's if we can bounce back there. If we're just going to drop here, then I'm just going to be on the side again. Well, I am on the side, but this is the level I'm waiting for. I would like to get a third touch there. And then maybe a short from that level. And then what could happen from that point is, like, once you get that rejection of the third touch, then you can potentially break out. Right? It doesn't. I've seen it many times. You get the third touch, and before it breaks, there's always usually three touches. Sometimes more. It depends on the buyers. Is the overall trend on longer time frames? Is the bias short? Then you can get like multiple touches, right? And then you've got like a full-on channel going on to the downside, which is not the case here. I think the bias for Bitcoin is still very much bullish. But yeah, I would look for a short if we can get a touch here. What are your thoughts on that, Mr. Gallo?
I'm going to be honest here. I didn't want to interrupt you, but I actually just got out of a trade in my personal account.
Oh, no worries.
I was like darting my eyes over at my other screen, and looking at yours and trying to listen as much as I could. Bitcoin, I've not been paying attention to much at all. I don't like that chart, to be quite honest.
Yeah, no, it's horrible. It's not. But this is exactly. Yeah.
Yeah.
It's not.
Don't.
Sorry,
Yeah.
carry on.
No, yeah, but actually, just for full disclosure here, like right before we had gotten onto the stream, I had just put 1 micro on the ES at like 62.23, and I was just looking for price to go back up to like the current 1 hour range, essentially, of 62.30, and it just got.
Do you want to
there.
show it? Do you want to show us quickly, or?
Yeah, I can show it. My trading view chart that I'll show is a little bit delayed, but I can just show the.
Yeah, you can do that. No problem.
Yeah, I'll show the range and everything. Here we go. But yeah, so this is the 5-minute chart. What I was, well, number one, I was looking longs no matter what going into this morning, just because there was like a little bit of a gap up. I mean, we've been bullish. We've talked about this the other day as well. Markets have been very bullish in general, but there was a little bit of a gap up, and then we almost had a gap fill, but it just barely didn't fill the gap between yesterday's high and this first candle here of today. And then we just had an immediate move up, and then we went through the overnight high here. And then I was just looking for consolidation over the overnight high, and it came to my level. It came to that level once where I wanted to get long, because I was looking at the September 2025 contracts as well. So the high would be 62.75-ish. That would be your, like, if you're trying to hold for the session and there's just a lot of buying pressure occurring. But for me, I was just looking, okay, if I see some consolidation here at the overnight high level, I can get long for either a break through the high that just occurred like 15 minutes prior on the day, or just hold and then get out maybe for like a 2 or 3 to 1-ish, because my risk was roughly I can't see it very well on the 5-minute here. Maybe I'll show it on the 1 minute. Let's see if I can. My thought was get long around like 62.22, 62.23, and then have my stop at like 62.1750, a couple ticks below this little consolidation area right here. And so I was risking roughly like 5-ish points to make somewhere around 10, so 2 to 1. And I actually missed this opportunity because I was distracted by looking to buy a new microphone. So I missed that opportunity, and I wanted to smack myself. But then we came back down here right before the show started, and I got long like here on this candle here. We retested here at the overnight low, and then we came up. It's been 30 minutes or 35 minutes now of just grinding. But the cumulative volume delta and the tick, I don't know if you look at the market internals very often, but like for like the NYSE, but the tick just started kind of spiking, which and then cumulative volume delta was super short and starting to lighten up. So it looked like a little bit of buying pressure was starting to come through in the market, and good for me. That's what came to fruition, and we got back to the top end of this range here. It's actually, the market's trading at 62.35 right now as we speak. This is 10 minutes delayed. So yeah, and I got out at 62.31. So I probably should have held, honestly. All the market internals that I'm seeing are screaming, just go long, just stay long.
What is is that trading view?
Yeah, this is trading view here. Yeah.
So why don't you open just a US 500 chart with a normal broker? Then you'll be able to see it properly. You won't. There's nothing delayed there.
I'm not permitted to show my other charts. Supposedly, I have to use trading.
Yeah.
For now.
Yeah, no, on trading view. Well, you don't have to do it now,
okay.
But I'm just saying, like, if you look at, you can, if you just type in US 500.
Okay, gotcha.
Is 500. There you go, and then just use the first one. There we go.
Beautiful. There we go. Yes, perfect. Exactly.
So that's up to date. Yeah.
Thank you. Yep. So I got out literally when we were I interrupted you. I was roughly right here. And now we are up here. I was getting worried because the tick, the market internal like tick was just getting, it's been a little bit choppy today. So as soon as it seems like there's a ton of buying pressure occurring, then all of a sudden the tick slams down. And what I mean by the tick, all I'm explaining is more stocks are getting hit on the bid than are getting lifted on the offer. So it's more aggressively getting hit on the bid than aggressively getting hit on the offer. And then we all know cumulative volume delta is essentially that like pressure buying or selling pressure situation, but for just volume for whatever market you're looking at in general, just volume traded. So
that was a beautiful rally. That was a beautiful rally.
It was, and
I can see the same on. I thought I was looking at I was going to say the same on the NASDAQ. It's actually the pound US dollar. Oh my god!
So you are ready to trade it.
Oh man. Okay, so now you get that correction. Yeah. Okay. Yeah. So this is
But this is
But anyway,
good.
If you fix it. Yeah. Sorry.
No, this is looking good. The S&P and the Dow are looking really good, but the NASDAQ is looking, it's double topping for the day again, unless it's going to break through that. So so that's another thing where it just depends on how many confirmations you need to stay in something or get out of the trade. I decided to get out, which means that the NASDAQ will probably bust through its high, and then we'll see the S&P 500 go to the long-term target of the September contract high of 62.75. So, and I'll miss out on 50 points, but hey, at least I made some money, so I'll take it.
That's the most important part. Cash in, lock in some daily cash. It's not always possible. It sounds great, but it's not. It's just not how it works.
It is very hard.
It's not a McDonald's, What do I mean by that? Oh yeah, like if you have a McDonald's franchise, you just sell burgers all day long, and you make money with every single burger you sell. It doesn't quite work like that in Forex. It's it's a unique kind of thing. There's nothing like it. Very, very different to anything else out there. Any other profession. you know, this is the only profession where you could potentially spend many years and put in a lot of time and effort, and you have to pay for it. You have to, yeah, you know,
it's true.
You're not getting, yeah.
You're talking about becoming a doctor.
Yeah. Well, I think it's like, you know, a doctor, you know, it's 7 years. Yeah, of course, it's difficult, but you know, once you can, it's at least it's like, it's science, right? 1 + 1 = 2 kind of science. Well, obviously, way more complicated than that, but you know what I mean.
All it is to be a doctor.
Like, no, I'm saying it's like you're learning a science, and it's like that's it.
Yeah,
trading.
No, I was going from the point of view of debt, right? You know?
Yeah, I know, but I was getting there. But it's, you know, 7 years, and that's it.
Like, oh, I've got a good salary now, but I've got no house because I've sold everything. It's like, you know,
they earn, like, I don't know how much did they accumulate over that 7-year period. It was probably a lot, but they earn about $150,000 to $200,000 a year.
In the United States, I think the average debt accumulated, I mean, I know that the range is somewhere between $300,000 and $500,000 and it's technically, you got to do residency too, so you're looking at like 10 to 12 years of.
It's incredible.
Because then residency, you're making no money. Like you are,
yeah.
It's like minimum wage essentially. For I don't even know how long they do residency. I don't know if it's 2 years or 4 years, but yeah, it's just, let's go into $300,000 to $500,000 worth of debt to then be making probably probably more than 200 or more than 200 a year, but getting after taxes and everything, and then getting out of that debt, that's a long process. You're set up like once you've been a doctor for 10 years, but after you've paid off the debt, then all of a sudden the cash starts rolling in. But until then.
Yeah, well, I mean, trading's like,
okay.
The idea is you've got to try and build up capital over a period of time, and then it makes the trading easier because you can trade less because you've got more capital, less risk because you're not using leverage to level up all the time, and that's the game, isn't it? And it's that island which always has a rainbow and sun, which we're all trying to get to, which is like one trade a month, use about 100K. That's all I need. Let's do it. Let's go, right? And it's this is the whole game. Persistence, consistency is and success all has to line up in order for us to do that. But that's what I'm trying to head to, you know, ultimately.
Yeah. And that's probably, you know, that's a great analogy, I feel like, and that's why a prop firm like, you know, Hola Prime with you don't have to have necessarily all of that capital. You just pay a smaller fee to then learn and better your skills, to then try and develop, essentially get payouts, to then develop your own account, and you know, maybe in the long run, or you just then you have a prop, then you get successful with a prop firm, and then on top of that you have your own account, and then it just opens up all these doors, but at a much lesser cost than, you know, just starting out with your own money right away. So it's pretty nice.
Yeah, it definitely gives you the access, but I think you know, the skill set is still the thing that will take the longest. And really, like, and everything I say I've mentioned before, but really, it's if you just if you keep a trading journal, then you'll finally come to the realization that just wait for the clean, easy setups, right? Yeah. So if you think about that, then it's actually not that difficult.
But to arrive,
you understand what I mean?
But to arrive at that point where you arrive at that point so many times, you just like, no, I'm not going to trade. I don't want to feel the pain, right? No.
Yes. Yeah, and then because of what you do, and it's you need to kind of step back and just catch yourself, because it's so easy for you to get drawn in by what, you know, the charts and what it's looking at like right now, and to try and look for an opportunity that's just not there, or, you know, and that this is also leading into analysis paralysis, and you're drawing like 100 different lines, and you know what, I think I've looked at everything, and my conclusion is it's probably going to go up. Right? It's like no, it's really just a case of it should be clean. It's just clean and straightforward. And those are the best setups, and they are the most beautiful trades to take. And what a great feeling it is to take a trade and it just immediately goes into your favor, and it just takes off, right? Those
better.
are, nothing beats that for sure. But we just didn't have those charts. For me anyway, for most of June,
Yeah, and I'm hoping July is going to be a better month. But this whole thing, like, I remember when I was first starting, like every winning trade. I remember when I first made like 10K in like 3 weeks on 100% trade, and it was like, we're having a party, like it's just like non-stop party. This is unbelievable. Look at me, I'm the man, Look at me, I'm the man. It's just that was all night. But now I'm like, I get on the phone to my partner and I'm just like, hey, how's your day been? It's like, I'll just add another 30% today. Whatever. What you been doing? Been shopping? That's it, right? It's like, there's no party. It's just like, this is what I do now,
Yeah, for sure. You do get you do get used to it, but it's still. I mean, don't you find yourself sometimes that you're getting like, it's almost like you're being sucked into this tornado. Your mind is just kind of like it feels like you're in a tumble dryer. Like you feel like you don't know what the hell you're doing. You don't know what you're looking at. It's like, oh my god,
oh yeah,
that's
oh yeah,
yeah.
too many times in the past.
Yeah. No, I've got like almost like a SOP for that, like a standard operating procedure, because that has happened so many times. Like, hey, by the way, this is what happened. Yeah, okay. Now you just need to back off. Don't look at any trades. Remember, like, remind yourself that clean setups and then I refer to the trades that worked out beautifully. And there are so many of them, and there will be many more. It just doesn't happen every day. This one.
You might be onto something. It's like, imagine like your trading desk, and you've got like a trapdoor with a button you can press, right? And it takes you to a ball pit with a mimosa or something, right? And it just, what I'm saying? You just like, it's got like the FOMO switch, right? I'm feeling something, and you just crank it, and then down you go, and then you're just in a ball pit with a mimosa, and you're like, I feel good. Maybe
I told you about that.
We should manufacture.
I told you about this. I told you about this device that Brett Steenwager was talking about in one of his seminars, right? I told you about that. It was like he had this device connected to him, and it would measure the anxiety levels. I don't know what the hell. Like I don't know if it's blood pressure or breathing, or I don't know what the hell. But basically, no. It's something like you strap around your chest.
Oh yeah.
Like right. And then it's connected, and it measures. Basically, the bottom line is it tells you if you're like in the right frame of mind or the right state to make good quality decisions. Like, you're not stressed out, you're not nervous, or anything like that. Because when you're in that state, you're not going to make good decisions. But anyway, I don't know why I mentioned that, because you were talking about, oh, that's not a bad idea. You could just press a button. But if you we spoke about like that, and if you are nervous, typically when you're nervous about a trade, that's like almost separate from feeling confused, right? When you feel really nervous, you're probably just trading too big. You should never feel nervous. You're just trading too big, right? But the confusion is just, that should be like, you should just immediately know, okay, this is not this is just not the right conditions for you to place any trades. There's nothing wrong with you, and stop telling yourself you don't know anything. Of course you know what you need to look for. It's just like the charts are not very clean at the moment. It's just not a good time to trade.
Such a good distinction. That's a great distinction. Being nervous versus being confused. I never really thought of that too much. A lot of the time, I think I think maybe too, for like, especially for beginner traders, is maybe those two feelings get bundled together at times. They're not only nervous, but they're also confused because maybe they just don't have enough time in the markets, maybe the screen time, or they just don't know what levels maybe are more important to look at than others, or maybe they just don't have enough, exposure or haven't researched enough. But with the nervousness, you hit the key on the head, or the nail on the head there. I think with because I know it's for me. Like if I'm ever feeling nervous, I'm sizing down immediately. It's like pulling that lever. I think Paul single-handedly thought of the solution. Pull the lever, go into a thing of balls with a mimosa. Are you kidding me? That's like that's insane. That's insanely great. We need a startup thing going on. You know.
But here's the problem. Will you pull the lever?
Well, if you wire it up to one of those machines which monitoring your
and
heart
it will
rate,
do that for you automatically, yes,
do it
that would
for you,
work.
yeah.
Like if it's because you won't do it.
Let's do an app for the Apple Watch. Let's just do it.
You
Get in the
combine.
chair, do some DIY. Just put a hole in your house. Get rid of that living room. You don't need that, and just we'll put a ball pit in there. It'll be great, right? It'll be fantastic.
Yeah, I think you're right. This is we all know. Like if anybody's watching, capable of programming something like that for us, you can contact Paul at paul@greatideas.com.
AI will do it for us. Just get on Anthropic or Cloud or something and just say what we want. It'll do the app for us, right? We'll pitch it on a Prime. It's going to be great. It's going to be fantastic.
You're going to have some people when you're going to combine those two technologies, the waist thing and then the ball pit thing, so that it can all happen automatically. But then you're just going to see a bunch of people with the floors out from under them. They're just always hanging in the ball pit with mimosas. And then you got a different problem on your hands.
Yeah, we've kind of messed up the Hola Prime challenges here because everyone prefers actually failing because they get the drink.
Yeah, the reward is skewed now. You've got different reward systems here.
Yeah, but just to get back to the point of you have to wait for the good opportunities, and when you truly wait for those, and we've mentioned this so many times, and it's just true. You won't place many trades. I know it's different in future scalping. I'm talking more about, say, longer time frame opportunities. Maybe that's true for scalping as well. But anyway, there's this one guy, you may have heard of him, Stephen Dux. Have you heard of him, Stephen Dux? He made the most money in a day as a retail trader. I think it was $3 million or something. Wow. But yeah, I mean, but he, I've been. This is now going back a few years, 5-6 years ago, and he was talking about like it just does like one trade like a day maximum. He's now gone down to just one trade a month.
Dang.
Right. Yeah.
That's exactly what I said, right? That's
and he's making more money than when he did. And the guy is like, and he's a very, very humble. He's a Chinese guy, moved to the US, so his English is a bit broken, but very humble guy, and not that flashy or anything like that, but just really understands how it works. Just like he knows exactly what his good opportunities look like, and he groups them. He's got different plays, and he knows the very best ones, and he just discarded all of it, the rest of the plays, and he knows like this is the best one, and it will probably come around once a month on average, right? And that's the only trade he takes.
Yeah.
That's nice. That's nice when you've but I think that's exactly tying to the point we were talking about of like accumulating enough wealth to then be able to be comfortable and do that kind of thing. Yeah. Like, be able to wait for that. I just pulled up a picture of him, by the way, and I do know who I didn't know his name, but I recognized him immediately.
Stephen Dux, yeah. There's a couple of interviews. There's an interview. It's quite long, I think. 2 hours or something, maybe an hour. I can't remember. I watched it a while ago, but yeah, he's a solid. He's the real deal. That guy's the real deal. Like, and everything he says is like you just know he's not a bullshitter. He's a proper trader. But that's exactly what we approach here as well. Like if you really went for the high probability setups, you're just not going to place many trades. It's just that's it. Right. It's not about, increasing the time in front of the screen. It does not equate to more money. It just doesn't work like that. It doesn't work like in the corporate world out there. When you work extra hours, you're going to earn more money. It's very counterintuitive.
Yeah. Trade smart and not harder. That's it.
Yeah.
Yeah. just understand, just work to the point where you understand exactly what you're supposed to wait for and what a good opportunity looks like. Once you get that, then you're not gonna. It's very much a part-time thing. It's not something where you have to put in 8-9 hours in a day. It's a few minutes a day.
I mean, yeah. I mean, I honestly want to get to 50 with some color left in my hair. You know, it's like
yeah.
I genuinely want that.
I'm
right?
lucky.
But hey, look. Shall we? Can I have a quick look at the crypto stuff? Because I might.
Yeah, go for it.
Right.
Oh yeah.
Brave, but it won't be coming into fruition today, I don't think. But let's have a look. Again, you know, not much has changed since yesterday. We're in the exact same range. Let's just obviously just double check. Just have a quick look at a couple of Bitcoin charts. And we were talking yesterday, not that one. We were talking yesterday about this disparity between futures and spot, and how that can sometimes be a subtle but meaningful insight into what the market's thinking. And you see now we've got a slightly bigger disparity of about $500. And again, it's just these tiny little things just to help calibrate us to the market, but potentially where we're going to go. And when I'm looking at Bitcoin, and I'm looking at it now, if we just zoom in, this is the 12-hour chart. I just on glance, it's not looking uncomfortable up here. It's not looking particularly uncomfortable, and I can see potentially, you know, I mean, obviously, basic trend dynamics. What are we seeing? We're seeing a higher high compared to that, right? But we've still got a lower low. So a retrace, come back to this range is perfectly normal. But a bounce from here, right? Maybe with a bit of confidence with the median line on the RSI, I can see that happening. And then, of course, that's all-time highs. And then all of a sudden, the market's going to move again, right? So that's just the general perspective. And I say that again, knowing that everybody, Coinbase, everybody is buying Bitcoin this week, this month, today, as often as they possibly can, right? So you see this, that's people buying significant amounts, right? So this is why I'm thinking that, you know, July could be a pretty good month for all markets, but potentially for crypto, and very subtle sort of thing. And again, if you look at this daily chart, you know, we're back above here. We've got the golden zone below us, right? This is starting to give us a bit of a bullish context, for sure. But the issue is with altcoins, and again, yeah, so that's obviously what the chart we're looking at yesterday. The issue with altcoins is that Bitcoin dominance, if I can find it, I can never find that chart. There it is. So Bitcoin dominance, I've put this line in the sand because we're higher in it, and this is obviously not good for altcoins. But for the trade I'm going to look at in a moment, I want Bitcoin dominance to come up a bit higher, maybe to this level, which is previous resistance, right? And then maybe get a rejection. And if that lines up with the end of the month, then we could start to have, at least, even if it's just a macro move, we can start having a bit of some good movement. And this is essentially the play lining up for me. So I'm going to turn to Crypto OG Theta. And we've got to just zoom out so you can see the big picture, right? Now, the big picture is this, and it is a big picture. So this is previous bull run, right? And you can see how muted everything is. I mean, like we're below $1, and this is the previous high. So great buying opportunities. But the thing is with Theta, it's right at the bottom right now, right at the bottom. So it's one of the ones which hasn't entered negative price discovery. You see here, this is the previous range back in this is before the bull run sort of kicked off. This was October 2023. Bitcoin started making moves, and this is what happened. So we're back at the floor again. And even though there's a plentiful risk of Theta entering negative price discovery again, and we need to be mindful of that because the altcoin market is not doing well, there is an opportunity here. So for me, the play is very straightforward. I'm looking for the another touch of support, which is about 0.566, and I'm looking to simply capitalize on a bounce and then out. That's it. In and out in this range. That's what I'm looking for, right? Now, because it's long-term support, that does provide me confidence because this support line isn't just a support line, it's the ultimate support line. So, you know, this is where the last line in the sand for buyers are. And Theta, obviously, it's not something which is absent of attention. I'm invested in it myself personally, and other people are always looking to invest in it. So this is the play. So I'm going to put an order on right now, and hopefully over the weekend we get something like that. So I'm just going to switch to my thing. I'm just going to put that on. So 566. I've got to wait for it to enter. We'll put that on, and we'll hope we get a retrace. Letting it come to me is essentially the play. And I'm going to do this as a leverage trade as well on another account. Not as good as the Order Prime stuff, but that's what I'll do. So that's theta, a potential play for people. It's going to be a hard, aggressive support buy. You want to look for confluence with, I mean, it could be pretty oversold, you see, and this is the thing, right? This is what I want to look for. We're pretty oversold, and the move down here is probably going to push us back into oversold conditions. That can provide us with confluence. If the stock as well as a bit of a momentum indicator can come down as well, then there you go. Long time support, come in. I'm not trying to capitalize on this sort of move. I'm not trying to do anything like that because the conditions aren't there yet. I am, however, trying to capitalize on the buyers which are coming in at the support because of all-time lows. So that's essentially my play with theta, and we'll see how. And I'll put it on another exchange later. Trump's still in play. Again, simple breakout. If we get it in this range, come in at support, or just wait for this, which would be a little bit better. That's Trump. But this is, I just wanted to show you wormhole we're looking at, because this is kind of the play which I highlighted, which is wait for a higher high, kind of played out, right? Now, I wouldn't have got stopped out if I had entered this, but look at this wick, right? Lots of people who have got trapped are taking profits, of course, here, and now the price action is putting in a bearish retest. So we break out, right? We get a bit of volume, which is good, right? We then surpass the previous high. Just honestly, I wanted to see it come a bit more, but that was the criteria. And then you look to come in on the retest. But of course, these people down here are delighted, right, that they've had an opportunity to get out, and they've pushed the market all the way down. And then people have bought, just like I'm trying to do with theta, the bottom or support, local support. And now we're putting in a bearish retest. So so again, the challenges we're facing with the market at the moment. So because you've got to think about, like, this is an opportunity for people who are trapped to get out. But I mean, I wouldn't have been stopped out there. You wouldn't have been stopped out. But you're now looking for another higher high and then a retest again, right? But it has to be another higher high. You have to have that. Otherwise, the buyers aren't going to show up when you need them to, right? If you do something like this, that's just rolling over. That's just rolling over for sure, right? So again, you want to ask yourself, what do I want to see to get probabilities in my favor? And this time again, because it failed the first time, we need, of course, maybe something to the top of the range. And then we've got a premise to come back down. But difficult setup. It's definitely not an A setup. It's probably closer to a C, but we need to be careful. But obviously, with fear comes opportunity, because we are at the floor. And like with my theta play, this is essentially to hope that Bitcoin gives us a little bit of, even if Bitcoin stays still and Bitcoin dominance just rises up a little bit, which it has done, this will push it down, give me the entrance, and then maybe then we get the pivot point in the market, and we just get that nice bounce, and it moves away. So that's the general premise of that trade, and hopefully on Monday we'll be able to talk about how that played out. But let's just, everything else is struggling. I mean, this is Pengu, it's breaking out right now, but again, who's trading that? There's not much. The volume hasn't really surpassed any of the selling volume previously. So again, we need to see something like this before we can come back in, and we're just not seeing it. Not many things are moving because of the hesitation. It's very eerie this week. I got to be honest, it's very, very eerie, the way the price action is handling. Just everyone's just sitting there with bated breath. So, but yeah, a couple of plays. You wouldn't have got stopped out with W, but it shows this is quite challenging, but also shows what you need to be looking for. Volume, let it be your guide. But Trump, honestly, Trump token is providing us with a couple of good setup opportunities, depending on which way the market goes. And as we always talk about, we want to have a plan and a trade setup for each potential scenario, which we could see over the next few days. And these sort of setups, Trump coin is providing us an opportunity potentially for bullish continuation with Bitcoin and a reversal in the altcoin market. It's also accommodating a retrace. This is why you should have this kind of in front of you, because of that, and not necessarily just because it's Trump coin. It is a meme coin, so be very careful. But you can see potentially some of the moves we can get when the market turns, and these are the sort of tokens which are going to be the first movers if Bitcoin does make a move from here. So it'd be worth paying attention to this and trying to get your entrance. But don't chase it. Don't ever chase it. Come in where you want it to be, and if you can't get it, don't do it. But yeah, is there anything else to look at? I don't think there's anything else to look at. There are a few other setups on some low caps, but we don't provide them at Hola Prime for safety reasons. But yeah, so that's essentially me. We'll talk about the theta trade when it comes. But yeah, trying to find some setups in amongst the weeds. Yeah.
Do you look at XRP at all by chance? Have you ever? I mean, I assume you do, but do you like look at it in depth much, or at the charts or anything very often, or?
I've looked at XRP more since I've been doing streaming than I ever have in my life.
There was a time when I asked Paul, hey, like every single day.
It feels like you want me to look at it though, 4G. I mean, do you want me to pull up XRP and let's see what XRP is doing?
Yeah, I would love to actually, if you can.
This is everyone's so much more positive about XRP than I am. It feels like I'm the one wrong. Yeah. Right?
No, I don't know much about it. I do hear a lot of the buzz for it. So I was just interested to see what the chart looks like, because I haven't really seen the chart.
I mean, I've had my investment for XRP last cycle 10x. I mean, it was the worst performer, right? So I mean, you can't shake a stick at 10x, but I was a bit grumpy about it, right? Especially in the face of BNB, which gave me 50. I'm like, come on, XRP, do what BNB's doing. It's holding its own. We've been looking at, look, you can see here there's an inverse head and shoulders pattern, which we were looking at a while ago, a couple of months ago, and it's just been dancing around, right, all over the place. Like, oh, bullish, no, we're back down here. So it's not really, this sort of price action is highlighting the fact that, you know, it wants to, people are paying attention, it wants to move, it's going to have legs when the market recovers. This is what this price action is telling me, but it's also showing that it's not immune from what's happening in the market as well. So what we got, so this is the floor essentially of the bullish area. Can't see us coming back down there anytime soon. So what we got, basic trend dynamics, we've got a lower low, now we've got a higher high, really confusing, now we've got a higher low. So it's looking like we need to find a range to trade, really. I think this is where we're going to be at with XRP. So here's the range. 1, 2 clear touches, a bit of ambiguity here. I just want to see the price action with these candles and see how it interacted. Yeah, that's fine. There's the recovery bounce at that level. So the level's still valid. Let me just mark it in case anyone's tuning in so we can see what we're talking about. This is just a 4-hour chart XRP. So yeah, it's range trade for me, really. Maybe looking for a bit of divergence. I'm going to put the RSI on. Let's just see where we're at with the oversold. Yeah, okay, that lines up quite nicely, right? Because you can see we do get a pullback. We're going to have oversold conditions, which will bring buyers to the market. Let's just have a look at some of the order blocks just to get a basic sense of what people are thinking. Yeah, so that lines up with my thought process too. So that's nice that I've got some friends thinking the same. Let's have a look at the moon phases. No, I'm just kidding. I'm going to turn that off. That's just a joke.
Moon phases.
And just put some moving averages on. Do your due diligence. Make sure you're not missing anything. And of course, you know, if you see me talking about stuff like this, I expect you to be charting yourself. You don't want to be stealing my ideas without putting in the work yourself, because that's just not fair, right? Yeah, okay. So we got a bit of pressure. I can see it coming back down here. Buyers have shown that, you know, there's a wick there. So we could just see. But you might want, depending on the market conditions, you need to just be mindful about where you're going to take profits. Okay, so obviously the 200 MA right on this time frame would be an example. Maybe do some multi-time frame analysis, find where these moving averages are on different time frames, and then use that to decide where you're going to take profits. Now, for me, there's kind of another little range here. I'm just going to look at what the risk reward would be. Again, just do all the math and do everything and just figure out, you know, is this going to be a play which I'm happy with? Where are you going to put your stop? Yeah, okay. Yeah, all right. That's not too bad for me. I can work with that. I'd like to be on the bottom of the order block, to be honest. But obviously, if I have conservative price targets, so maybe if we look at something like this, I mean, it's going to be that. If the market's still hesitant, you just need to trade the range, right? Even this little sub range, right? Pop in, pop out, up a little bit of momentum and get out, right? Because presumably it's going to maybe continue down a little bit. So that would be the play, but you need to do a bit of work on it and just do some multi-time frame analysis and figure. But it'll be a range trade maybe for XRP. And this could be that if you look at this as the higher low following this, and that's the higher high following this, this could be a double bottom, which could then give us a bit of a bounce. But I can't see us bouncing from here because of the pressure. So this might be the play, and that just people paying attention, that's around 1.9 for XRP. But yeah, so kind of bottom of the bullish range. There's obviously this is a bit of a bear trap, but we've been holding our own so far. So yeah, that's what I'd say about XRP. It's doing okay. It's ready to go.
That was some good analysis right there, and that was super quick too. I like that. Shoot, it seemed like a lot of people are like the $2 area is just very interesting over the last couple of months, I guess. So that's interesting.
Yeah. XRP is going to be one of those ones where, like, in 10 years' time, like, it's like the #1 crypto, and everyone's like, "Hey, Paul, like 10 years ago, didn't you say it sucked?"
Yeah. What's wrong with you, Paul? I mean, I remember when Bitcoin was still in cents, and I was aware of it. I was like, nah.
Nah.
I can't cope with those feelings. Every couple of months, I wake up in a hot sweat, and I'm like, I could have bought like 100 Bitcoin.
Yeah, yeah. But so you were also familiar with Bitcoin at the time when it was launched, and it was like a couple of cents.
No, I was a teacher, mate. I had no time for anything. I didn't even know.
I knew. Yeah, but oh god, it was just like at the time the people I was surrounded with or worked with, also in the financial markets, and they were like, nah, it's a scam thing, like, and it was just
Yahoo?
a few cents.
What a stupid name. That's not going anywhere. Don't buy Yahoo
30 cents or something at the time, 40 cents. I can't remember. It was like cents. It wasn't even $1.
So I don't know when I was aware of Bitcoin, but this is the issue, right? So now you can just be like, pop on Coinbase, give me your passport, register, buy Bitcoin. Back then, it was an ordeal, right? It was like, how do I buy this? What is this? What is this decentralized? How do I buy? This looks dodgy. It's like, how do I do? So the problem is, it was very difficult for people who were not like at the forefront of this new blockchain technology to understand how to actually buy it. And then those crazy people who did buy it, they're like, look at me, I got Bitcoin. Like, oh, don't be, Jason, you're such a moron. Just get a job, right?
Yeah,
and then Jason's got a boat now.
Yeah.
No, but I mean, it created like how many millionaires, right? Like hundreds of millions of dollars. You know, those people made who bought it at the beginning. But yeah, I mean, Bitcoin is now obviously that opportunity is long gone. But there was I saw this video of this guy who they interviewed, and it's just a regular guy. And he talked about how he bought a pizza for 20 Bitcoin, like way back, right? So he used to pay for the pizza with his Bitcoins, and he paid like 20 Bitcoin, and he didn't think anything of it. Nobody knew it was going to go to 100,000 or perhaps even higher than that.
$100.
$100. I mean, when it went to 2,000, remember when it went to 2,000? People were like, what? 2,000? I remember that. It's like, holy shit.
Yeah.
And then it went to 5,000. Like, oh my god! And look where we are now, right? We're like above the $100,000 level. So we could be looking back at this and go, yeah, remember when it was trading at 100,000?
Yeah, I agree. Because I have that same feeling of, could have bought it, but when it was at 18,000, like what it was like 2 or 3 years ago or something, I genuinely was like, wow, I could reasonably just buy one full Bitcoin just for a nice round, like just have one Bitcoin, that would be great. And I didn't pull the trigger, and now obviously I hate myself just as much as I would.
I was the pandemic crash. I had money, I had loads of money, and I was just like, I was looking at the charts. It was $3,500. I hadn't experienced really a lot of black swan events, right? Certainly not a pandemic, because I'm not that old, right? And it's like,
come on, Paul, you were around during the first trade war.
Yeah, sure. Yeah, I caused it. It was the Great Depression. That was me. It was just, and it was late at night. It was in Caracas. I was staring at the chart, and I'm like, and all I had in my mind was, it's going to naught. I'm like, I was such a moron. I really was. I could have. It wouldn't have been a problem. I could have just lost, $3,500. It wouldn't have been a scratch. And it would. And then within a year, it was 69K.
Yeah.
I mean, I think many of us have that same feeling and those same thoughts. That's just our minds playing tricks on us at times, especially with, I mean, like
the thing is, like, when Bitcoin was trading at cents, like just buy $1,000 worth of, I mean, that's worth a risk, right? Just $1,000 worth.
But at the time,
2,000 Bitcoins.
at the time, that seems like it's a 99.9% probability of just throwing your money away, though. So
yes, for sure.
That's the problem. It's like, is $100 worth that, like that gamble? Like, and then you'd be like, no, I'd rather go. Here we go. There's gonna be some conspiracy theories on me now, but just go to the craps table or the roulette table or something. People are gonna really start thinking I'm having a problem. But like, at least you have a 40% chance there, instead of whatever percentage you make up in your mind at the time of Bitcoin being worth 5 cents or whatever.
The thing is, like, there was just no information about it. There was no information in terms of who started this thing. It was difficult to do at the time anyway. It's still the case. Like, do we know now who started Bitcoin or not, or still not?
No, I mean there was a pretty mainstream documentary which came out a few months back, and it was just nonsense. Sorry, it was just nonsense. And the thing is, like, we took Bitcoin's price action always pancakes, right? So the couple of bull cycles previous are just like a flat line now, and when everyone is. So we're lamenting at the fact that we didn't buy Bitcoin when it was like $1,000 or a few cents. But the reality is that, I know that if you have just a little bit of Bitcoin now, right, the conversation in 10 years' time will be when Bitcoin's $1 million, right? Everyone will be like, oh, why didn't I buy it at 100K? Why didn't I buy it at 100K? Like, it's going to be the same conversation down the line. So like when I got into crypto and trading after that bull run where Bitcoin suddenly just went from a few $100 into 19K, and that's got my attention. And I said to myself, I'm not missing that ever again. And that's why I invested that summer in 2020, started learning how to trade. And then for the first time, like, I had made like 6 figures from just some basic investments. And so there's always going to be an opportunity, but it goes back to the basics of, don't buy green, buy red.
Yeah. For sure. But now the attention for you is shifted to the altcoin market, right?
Yeah, because it's extremely calm and relaxing to trade.
Yeah. A bit of Mozart in the background with your whiskey.
We had a meeting the other day with some of the other coaches. I can't remember who was. I'm not sure you were there, my friend Jannie, but and it was like, I think I made a crack about being stressed, and I forgot to quantify why, because I'm the crypto guy.
Yeah. No, I didn't. No, I was definitely not there. Okay, so
I think Robert wants to program something for me.
Oh, what do you want to program for us? Oh, are you a programmer, Robert? Is he a programmer?
Open that chair and the ball pit and the mimosa robot. He wants to.
Oh, yeah. What am I supposed to be programmed for Paul? It sounds like he's willing to do it for free. So, this is your...
No, it doesn't sound like that at all. It sounds like he's asking for a new client.
Well, I don't know. You're doing a lot of stuff for him. This is like how the mafia operates, doing you a couple of favors.
Robert, I'm not doing anything for him. I'm mildly jabbing him about his aversion to Sol, and more than anything, right?
So, oh yeah, what's Sol doing? What is
Robert's doing stuff for us because he's being here interacting with us, which is very valued. So we're very grateful to have him.
Yeah.
So we owe him, really. So maybe I should program something for you.
You can program?
No, but ChatGPT.
Touche.
I'll write you a song, Paul. I'll write you a song. Oh, you're a songwriter? No, never.
I am a musician and a music teacher, so be prepared for some feedback. That wasn't strophic form. What are you doing? You can't do that.
That reminds me of that one episode from Little Britain. Remember that comedy, Little Britain?
The only gay in the village.
But the guy was he's a teacher, and he got this Valentine's card, and he scored it out of 10. That is not correct. It's not. This is how you spell.
Good show.
That's exactly. That was very funny. Yeah.
British humor.
Yes, but my favorite series was definitely The Office with Ricky Gervais. Oh my god, I love that.
Classic.
I mean, Paul G, as an American, are you all Steve Carell'd up, or have you watched the original?
I've watched some of the original, but I've watched all of the Steve Carell version, as you would say. Yeah,
I like that.
mean,
I enjoyed that as well.
They're both great. I mean, I love Ricky Gervais. I do. I mean, I just love that guy. He is just one of the most unique, best people ever. I love him so much. I'm a big like comedy fan in general, so he's just up there, like one of the greats for sure.
It's so funny.
I don't know. He's so good at roasting people. Honestly, I think I would love. I don't go to many comedy shows, but I think it would be an honor to be roasted by Ricky Gervais. It would be an honor.
I would love. Oh my! I'd be crying, laughing so hard. I would love it. I am right there with you.
What's this crypto then? Huh? What is this? You know, it's just like, that's what it would be.
I mean, oh God, he just makes me cry sometimes. It's so funny. It's too good.
But he hasn't, like, I haven't seen anything from him for some time now. I don't think does he still do? He's probably he's getting a bit on. Well, he's not old, but
saw him in the late night circuit a couple of months ago, so he's still doing stuff. Yeah,
he did like a movie recently. I can't remember the dang name of it, but it's about like his father has like Alzheimer's or dementia or something, or maybe it's a show. I don't even remember.
Oh yeah, on Netflix. Like, oh yeah, but it's not. I don't think it's a comedy. It's more like a life, right? And his wife died of cancer.
But inherently, the way that he it's one of those weird things where it's like it's kind of like dark situations, but the way that he's talking, it just you know who he is, so you know that it's serious, but you can see it being funny as morbidly, you know, as the situation.
Yeah, I know what you mean. Because you're right. It's not just some random guy. You actually know him as a person, or you know, well, not you personally, but he's pretty transparent. When you look at him, he's very comfortable. He's just him. He's very.
He doesn't care. We should all be like that. So I was just looking at Robert. He says his son plays the viola. I'm very sorry to hear that, because that must be awful for you, right? Because it's like I'm an oboist as well, and it's one of the oboe and the viola are like two instruments where when you're learning, it's pretty rough to listen to when you're learning, right? Even if you've done it a few years. So I don't know how old your son is, but I hope he keeps it up, and of course I hope he's successful. But yes, we do need more music teachers as well. But
is it true that it takes many years to learn the harp? That one.
You also have to die and become an angel before you can play it.
No, that's not true.
No, you do. You don't. People don't understand that when you see an orchestra, the harpist is actually not with us, right? Moved on.
But it looks pretty complicated. Is that like a double string thing? Like once?
Yeah, it's a completely different orchestration of how the strings are laid up. But all string instruments vary in terms of the type of strings. But yeah, I mean, I don't play the harp. But I do know a harpist.
It's too difficult for you.
They're not easy to carry on the train.
Talking about the train. Oh my God.
What does a harpist do? How do you get your harpist to say like a wedding? Because I know someone who does that. How do you get it there?
That's a good question, especially there in the UK. I remember that this is the first time I ever saw something like this in the UK, especially there in London. When people move place from one place to the other, they just leave everything there because it's like almost impossible to move it.
Yeah,
you know, they just leave everything outside, like the washing machine or microwave. Just leave it outside.
Did you visit London in the 40s? I'm like, what?
No, 50s.
Anyway, so next week, the markets. What can we expect?
I don't know.
Great. All right.
Nobody knows.
Right now, we're ending.
We're entering into a new month, obviously. So, and that means we're going to get an NFP the first Friday. So next week, Friday, will be NFP. But I don't know if we're going to expect any kind of big moves because we just haven't had a decent reaction of any high impact news events for several months now. That's just been the case. So, but yeah, hopefully we can break out of these nasty chart, kind of what the charts look like, and just get some sort of decent structure and trending markets. That would be great.
I mean, Paul G, are you more optimistic?
I don't know what to think anymore. I'm just looking at, there's that trade deals. There's a trade deal stuff going on in early July. I think that deadline is coming up, and then it's the summer, so volume is kind of dying down a little bit, relatively speaking. So not much expectation. Just keep following the charts and look at sentiment.
Yeah. Well, Robert, it sounds like you're a good dad attending concerts, so kudos to you. And that's fantastic. So yeah, we don't know what's happening next week. We don't know how good Robert's son is at the viola. All stuff. Tune in on Monday to find out.
Yeah, excellent. Thanks everybody. Robert, always great to see you. Everybody else watching.
Thanks,
always.
And then the next session starts in half an hour from now. Have a great weekend, Paul G. It was great to have you here again, man. And Paul, always nice to see you.
Always a pleasure.
Have a good one, guys. Cheers.
Thanks.
For now.
Cheers.
Bye-bye.
Hello, Coach Michael, Coach Aymane. How are you guys doing today?
Coach Sam, how are you doing? I'm good, and you guys?
Good.
I'm Michael.
Good as usual. Michael, you with us? I think Michael's got a bit of technical difficulties. It happens. Maybe it's raining again in Mexico. Big storms, maybe.
Yeah.
Michael? Michael?
We are here. We are live.
There we go. Yay. He's alive.
Hey, can you guys hear me?
Hey. Yeah, we can hear you now.
Michael is fresh, new haircut, green
I think he's got a few technical difficulties, but I do see the green lights. You're right. That means Michael's had a good day, which is what we always want to see.
Let's go, Michael.
Yes. I got him today.
Awesome.
I got him.
And
today.
a Friday as well,
Big
man.
time.
A Friday as well.
And guess what it was on, Sam?
Gold?
Yes.
Oh,
Yes.
finally, it pays off.
We need to clap one more time, Sam.
That is, we're going to have to see this one.
Yes.
Gold
Matter
has
of fact,
finally performed.
I'm going to jump right into it.
Go for it.
Yes. Let me jump right into it. So this is the same trade, guys, funny enough, from the other day. Let me share this. Okay, cool. So let's jump right into this gold trade. Right. So I actually moved this down. I was trying to show something, but can I show this? Yeah. I'm gonna just show this really quick. Let's get out of here. This is the gold trade, right? This was all night marked up nice and pretty, right? M top 1350 cross. We got the M set up here, which was one trade, right? Because I always say you take level 1 and level 2 trades. So this was the M off the 200, and I took this screenshot right before, right? So we had this funky little thing here. I actually took this twice. The first one I lost on, right? So I took this once right here. Then I took this again. I took this again right here. Right. And the trade was freaking gorgeous, guys. Like it's about time. So the funny thing was they've been throwing a lot of what I would call head and shoulders patterns lately, right? So
yeah,
this is the shoulder, head, shoulder, and it dropped. And I actually made a mistake. I'm gonna be totally honest. When I was in my session today, I said I should have never took this first trade. And I don't know what, I must have been distracted or something happened, but this outside the band right here, remember I always say you can't take it when the RSI line is outside the band like this. So I don't know what happened for me to miss this. Total rookie mistake in my opinion, but I should have never took the first one and only taken the second one, right? So they kind of messed me up a little bit. I couldn't believe that didn't go the very first day, but when I seen it roll back over, because it was never out of play, right? And what made it even worse, guys, the absolute worst about this is when I tell you, Sam, you was here yesterday. We was in a session with Guy.
Yeah.
So I said I had to close this trade if it closed above the 50. I literally closed this trade right here. And I mean, pips later, this thing rolls back over and closed it. Like, that hurt me. I was like, oh my God, gold is annoying.
That is more painful than losing, isn't it?
It is.
Like, that's more painful than being stopped out. Knowing you were right, but
Yes. But it's kind of like the markup that you showed. Like the direction was right, but then it stopped you out and then went to your TP. Like same thing.
That's it.
I'm like, what in the world? But when I seen this yesterday, right? Because I took this trade initially. Again, I took it here because I need the 4-hour confirmation. So this candle closed here. I took it, which I shouldn't have, as I mentioned on the 1-hour chart. It was outside the band. But once this green candle came up here and closed above this 13, I closed it because I couldn't risk it. And literally, sure enough, it rolled back over. I couldn't take it here because although it closed below the 13 EMA, I needed it to close below the 200, which is here. So once this closed, I was able to grab it. Right? But beautiful, beautiful, beautiful head and shoulders pattern off of here. Right? Just absolutely gorgeous. So I was happy I got my money back for one. Learning lesson, right? Like I was telling everybody, I'm like, for one, I should have knew not to take this because again, for me, when I see the head and shoulders pattern, a lot of the times the head will be outside of the band right here, and that's actually supposed to be my clue that it's not ready yet, right? So just wait and let that come up, make that right shoulder, and then once it confirms, then you can take it. Right, so that's all I was supposed to do, but I messed up on this setup. So I didn't make as much as I should have made off this. I lost 0.5%, and then I made 1.2%. So I only ended up with like 0.7% off this trade. In actuality, if I wouldn't have messed up the first time, I would have actually pulled out 1.2% on this altogether. So totally messed up on it a little bit, but everything was still there, guys. Like when I love to point out, like as you can see, this picture was taken before this setup happened. Knowing where you are in this cycle, once again, is just so important, right? Super, super important. And I stress that all the time. If you can figure out where you are in this cycle, you really push the odds in your favor, right? So it was no coincidence that this played out just like this. And you always got to refine your plan, right? Like I should have knew. And like my mistake this week, again, was taking this trade twice when I should have only taken it once. But my homework for this week is, all right, at the top of my list, going into next week, I'm putting in, make sure if you see a head and shoulders pattern that the head is outside the band and you're not taking the head of the trade, the right shoulder still needs to appear, right? So learning lesson for me. I'm definitely gonna bump that up on my check down list, so to speak, to not take these because I could have literally really had a great week. I did end up in green because I took this and also took another one I'll show you in a second, which is EG. But I could have pulled out way more off this trade, an extra 0.5% basically. Just by not messing up.
Yeah,
it's like seeing Steph Curry miss a wide open 3 or something. Like, dude, just missing a triple double or something like that. Like, yeah, you could have easily hit that shot, but I don't know what happened. The ball slipped a little bit. You didn't spread your fingers. There was no rotation. Every analogy you want to use for it, I dropped the ball a little bit with this, but so that was what I like to say was on the bad side, what I kind of messed up on. But when I took this trade in front of everybody again this morning, just the confidence that I exuded when I told everybody, like, are you sure? Like we took a loss on this, and we've been taking losses on gold. I'm like, guys, this is it. Like this is a setup. When a setup appears and it's still confirmed, you can't not take it. Imagine if I would have not taken this trade and it would have went, and I wasn't supposed to take this one and it didn't go. It's literally like exactly backwards. Right. So I think one thing I'm good at is always taking my setup. That's like period, point blank. Right. So that was good. Super bomb gold trade. Finally gave me some of my money back. Sam, I told you yesterday, I think I was finna dump gold.
Yeah, you did.
So that was one. And then I took a small quarter off of EG. This ended up not going fully. This actually ended up going like I moved my stops to break even once this was down here. Obviously, it didn't get my full TP, so I moved my stops to break even here once it kind of like grabbed this area, but it didn't go to the 800 as I anticipated. So I only got a small piece off this, which is about a quarter. I could have ended up having a half, but I only sold a quarter of it because I thought it was going to keep going. Right. So I ended up with a 0.75 off gold for the week and only a quarter off this one. But same exact thing, right? Like we can kind of, man, I feel like my computer's going a little slow. Not sure what that is. Anyway, we got the kind of the same setup here, right? We got the M top. Now, obviously, once the 1350 crosses, the level 1 move is gone, right? Because it already touched the 200. The next move that you're looking for is the money trade, right? As long as the move happened before this 5200 cross, which it did, right? We had this move here, and it halfway dropped, not fully dropped, but halfway. But if you check this out too, same exact thing. This move here was outside the band, inside the band, right? How I always point this out. This I could easily tell that this move over here was the first leg. This outside the band. This came up here, retested it inside the band, right? And it kind of just fizzled away from there. But yeah, I actually had to hold this for a little bit longer than I would have wanted to, but the move was still set up. We still had nice 4-hour confirmation, and it kind of slowly withered on down. I actually grabbed this at a great price. I grabbed this around here, 52. I think it was 55 actually. 52 or 55. No, maybe it was 52. Anyway, when this pulled down, I got a nice retracement entry off of this green candle here. So for it to kind of slowly go ahead and fade on down, super nice. Yeah, that was pretty much it on the two that I actually took. I'll go ahead and go over GU and GJ as well. I think I went over these yesterday. I wasn't really interested in them because it needs to do some more stuff, which, yeah, same thing, right? This is, for me, it's still just not acting right. I don't want to take any bounce moves off the 50 until after the 5200 crosses here. I'm looking for the W off this 200 over here, right? I'm looking for this move to happen with this reload. So for me, GU is still not ready. I'm gonna keep moving this over day by day until this finally happens. So yeah, I'm not interested in this at all. Like this for me is that no man's land thing. You try to take this bounce trade off this 50, it's not gonna go. As you see, it's having a hard time even getting there now. And if you look at this market baseline, it's definitely pointing down. It wants to go ahead and retrace to this 200. Once it starts doing this, then I'll be interested. Right? Same thing with the GJ. Same exact thing is happening. So I haven't taken neither one of these in quite a bit because they're kind of just doing the same thing, and they're not really giving me that structure or that pattern that I'm really looking for to take it. This can actually go up here. So these two have been kind of off my radar for a little bit. I still like to check them every day, but they just have not been acting right. So yeah, I'm looking for this move. Same exact move on both of these. Right? 5,200. Why does that happen sometimes? Okay. I don't know why that happens sometimes. It's so weird. 5,200. Cross. Level 2. Looking for that W 200. Right? So same exact move for both of these. The GU and GJ have been a little funny lately. So I've just been monitoring them. But yeah, I think that was pretty much it. I was looking at one more. Let me just type this on here too. 200 cross, double 2, W, the 200. All right. So cool. I think that last one I was looking at was, I want to say CAD Swiss, but it was really low already. I just didn't like this. Yeah, it was CAD Swiss. So this move back here was fine, but it kind of already made the move, and I don't like it when it's really low like this. Like, I don't want to. We got all of this downward like movement. The move has already happened over here, which is that bounce. So to take this move again, anticipating that this is going to go even lower, I didn't like that too much. Even though it worked out, which of course it would, but I don't like to take them when it's really low like this. This is for me a level 3 trade, and I don't take any level 3 trades. This is that 20% of the time where it'll work out. As soon as I take it, it don't work out. So I stay away from this.
I took one buy now on NQ.
Oh,
okay. Yeah, that's pretty much it for me. I'll come back if anything.
all right, you're up.
Yeah, so basically, like, we had this demand here, took this previous low, closed green, continuation. We have a momentum candle, and when you check the footprint, like, there is this minus 227 at the low. There was definitely some absorption, so that's why I bought. First target will be this low of this candle, because it's a supply, and then maybe hold it to new highs again. So
yeah,
we'll
nice. I was looking at a very similar trade, but I'm a bit hesitant jumping in, and I'll explain after you guys are done. I'll show you something of why I'm hesitant. Oh, Robert's here. He says good morning. Morning, Robert.
Good morning.
I was worried you weren't here.
Hey, what's up, Robert?
Yeah. Actually,
no, he's not going to miss a session.
Yeah, Robert is low.
I would have started crying if Robert wasn't there. So
yeah.
If you ever miss a session, Robert, you're gonna upset me deeply. It's gonna hurt. So no pressure to keep tuning in. He goes, I was getting wrecked in NQ and then ended slightly positive. Hey man, that's
all about.
The fact you pulled it back. Well done, honestly.
Yeah.
Those are the
Especially
hardest
on a
days.
Friday.
Yeah.
Mm-hmm.
Those are the hardest days. The ones where you start off bad and then you kind of make it out. Best feeling in the world.
And this is the last Friday of the quarter too.
That actually makes a lot of sense. That is why I see what I see right now. I'll show you guys them whenever.
Yeah. I will show quickly because I traded today, so it was really nice setup. So actually, I took 2 or 3 trades. I showed you some, I think, before the trade. So basically, so we had this demand here unmitigated. We didn't test it. We tested actually here, but we have a really nice demand. Took this previous low, close green, continuation, and when we open up, it was more like just I like the numbers on the footprints. So this was the main trade. Where is it? Yeah, it's here. So basically, when we open up, like it was this 99 cluster at the low. So for me in the beginning, it was like we are bearish, like especially when this 5 minutes candle opened and it pushed straight away. But in my mind, I have it like I had two things in my mind, or they are like strong sellers, or if I saw the buyers jump in here, or there is big absorption and the price is reacting. So this cluster here it will be the start of the absorption. Plus, it's combined really good with the demand I had here lower. So actually, I had a really good entry. I entered 2 minis in the beginning because my stop was really tight, or I will get stopped out, lose I think 400, or getting some decent profits for a Friday. So that was the main idea of this trade. And literally I entered on the 32nd right here, and I moved break even straight away. So touching the demand, we had absorption here. The moment this big cluster was printed, like the price reacts, and I took a buy literally from here. My target was this supply right here, but I exit. I think somewhere here. I took one contract somewhere here, and then let the other contracts till this area here. It was really beautiful trade, really nice profit. Really happy for a Friday with that profit, and of course I took some small. Yeah. So actually, it's funny because
we know you don't like to trade Fridays, Aymane, so that's good.
Yeah, you smashed it today.
Yeah, it was a really beautiful one, and I don't like Fridays, but it was too beautiful that I am up for the week. Okay amount, so I said, okay, there is a
He's being
decent
humble.
trade.
He's being humble.
Come on, son.
He's being very humble. Let's just put it that way. we got Aymane Soros here. Aymane Buffett.
Come on, son. Yeah, it was quite good profit. Yeah. So I forgot what I was. so yeah. No, normally I don't trade Fridays, but it was too beautiful and small stop. So and I literally, like when we went, like when we reject, I went straight break even because I was entering not micros, like 2 minutes. And if I was stopped out, I think I will lose like 400 something, which is good. Stop loss was 9 points. So yeah, and it works perfectly. Did I regret to exit? Of course, yes. Of course, there is always this.
Right. That's like me today. Me today on gold, right? Because it continued to go too.
Yeah.
But I was happy for what I got.
That's it. The moment greed takes over, though, man, because the one time you do hold it.
By the way, got stopped out on this one, but it's okay. We had nice profit today, so it's okay.
It's okay. You can afford it, Aymane. Don't worry.
I got a setup here. Okay,
Ooh.
yeah.
Go for it.
Let's see. Where are we? Okay, cool. So this is nice. Our fresh 5200 cross right here. I didn't even see this today, funny enough. I probably was married to gold. That's what happened. I'm looking for obviously that M structure off the 200. This doesn't count. Reason being is the market baseline is below the static. Y'all know I'm looking for that reload. At this particular point, now we can see that the market baseline is above the static line. So this is good. This is fine now. As long as it's both together, which is market baseline above the static for the reload. And we have this M structure, right? This is what I would be looking for. And now it looks like we're getting a nice little pullback too. So more or less, this is pretty freaking good. Yeah, hopefully this goes to like right here. I'm gonna grab half of it, and if it comes up further, I'll grab the other half.
Why not?
Let's see. I'll put this right above here. Stops go above the swing. TP is going to be this ADR low right here. So right at a nice 1-for-1. And then my stop looks like it's at 106.15. 15 is close enough. 106.15. 106.15. And then If it pulls up far, I'll grab the other half. And boom. So we are short there. Let's see what that TP is. This TP is 105.34, basically. 105.34. 105.34. 34. Cool. Risking 37 pips to make 43. Basically 1 for 1. And then let's put a nice little alert here. Just in case this bad boy gets all the way up here, I'll put him in the middle between the 50 and here. And then I'll just put second position. Second. All right. And that'll do it. I like this also is price is already below the 13 EMA on the forward chart. I know I need my forward confirmation. If you look at this previous candle, you can clearly see that it's below the 13 EMA. After it ran all the way up there and smacked down. I like this. I like the way that this candle looks actually. So not bad at all. We'll see what this gives us on this beautiful last Friday of the quarter and last Friday of the month. We'll see how this turns out.
Last Friday.
Definitely a solid setup.
Like Michael, like what you prefer, this quarter or the first one?
To be honest, I like this quarter much better than the last quarter. Yeah. I don't know if you remember, but my first quarter was iffy. I had it was too much up and down. We had after that administration thing came in, then that possible trade war came in, that had my trades all over the place. Like it was a little funky. But for me, if y'all remember this quarter is when I had that crazy winning streak, like 13, 14 in a row. And we had a bomb set up like 6 weeks in a row. So hands down, I'm taking this quarter. I'm taking this quarter over the last one.
Yeah. I remember like you had a really good winning streak. I think I had the same winning streak, like a couple of weeks, I think, 4 days. Yeah, it was.
Yep.
Nice.
Yep. And you know what ended that winning streak was gold. Gold ended that winning streak.
Crazy. I just took a trade as well. I'll jump in. I took a short real quick. Let me just get this screen up. Come on.
Let's see it.
There we go.
All right, I'm in at 72.
I'm quite hesitant though on this trade. So I just jumped in I took 2 shorts, basically the same price. Just because we had that gap there that we blew right through. You can see it here quite easily on TradingView. And we technically came back into it, retest. I saw some heavy numbers where I'm expecting sellers to defend it, but I don't think it's so much new sellers. And the reason I think that is, so going back to what you said, Michael, about it being the last Friday of the quarter, right? So today, I think we can all agree it's been pretty bullish, right? I mean, look at the movement up, right? Especially since market open. I mean, the whole day. I mean, we started off today like down here. It's been pretty bullish, right? So you would expect that the delta would be, the cumulative overall delta would be positive, right? But if we actually look at the cumulative delta, it's negative. And even though it's been rising all day, you can see the numbers have been getting bigger. Sell 9.5 thousand, huge amounts, and that would lead me to believe that for the most of today, it's been people who have been, swing trading it, so to speak, been in for a bit longer, all taking profit before the end of the weekend, right? So we've just had lots of buyers from the beginning of the week, from down here, maybe back in Tuesday, Wednesday, who knows, wherever they entered, right? Because it's been a very bullish week. They're all taking profit now, which leads me to believe that the market is probably going to start dropping quite heavily, potentially, but it won't be aggression dropping it. It will literally be people getting out the market, right? So it's not going to have the same kind of like impact as aggression. So when I see like big sell numbers, I'm not too worried that these numbers are people getting trapped. I'm more seeing it as these are probably people, buyers getting out the market. Well, at least I'm hoping that is the case, because if it is the case, then we're going to slowly just start trickling down towards the end. Hopefully no one else wants to buy. It's quite late. Like you said, it's a Friday. I don't think anyone's really going to be aggressively buying right now. I hope not. If they do, well, then I'm screwed. But then I get stopped out. What can you do? But so my logic here is I'm hoping the fact that all these buyers are getting out the market, we're going to see the market push down, hopefully. Where it could go down to, who knows, right? But I'm going to target these lows here. It's pretty obvious. I don't like the fact that it's going up a bit, but we'll see if this area holds. Hopefully it does. And yeah, should be okay. Should be okay. But I got my stop above the what do you call it? Above the gap. So hopefully it just floods down a bit. I want to see that kind of push down. We are still seeing buyers coming in, annoyingly. But every time they came in quite heavy now, they've been at near the top and got trapped. So again, you saw it here. 300, 300, market push down. 189, 160, market push down. 200, market push down. Another 200. So I'm hoping market pushes down.
Well, one thing, Sam, I didn't see before is if you check, Sam, like I think 4 p.m. my time, like on the 15 minutes, like there was some big cluster at the top with very high volume. So there is high chance, like you are right. I didn't see that. Like there is a squeeze. Last green candle, big green candle on the 15 minutes.
4 p.m.
my time, which is I think 5 or 3 p.m. your time. Yeah, this candle there.
Yeah. Absolutely. You're absolutely right. There are big clusters of 900.
Yeah, and I think at least on NQ, like there is the highest volume. If we don't include the 9:30 a.m. volume, this is like we have 23,200. So there is high chance of potential squeeze, like you said, the buyers exit, because when you see those sorts of volumes, like buyers exit, so there is high chance we will take out those lows at like 6,221.
1,000,000%.
Yeah. I didn't see that.
Yeah, 100%. Yeah, but again, like, go on.
Mm-hmm. But we need the price. In my opinion, we need the price to continue. We need the price to continue like it is, like no big retracements, just straight melting down slowly. Because I think like the squeeze that we have is strong enough to push the market lower. If we start to retrace in big retracements, it's not that aggressive.
Yes, absolutely right. We want to see it kind of just trickle down. It doesn't have to be like super fast, but just very sort of stable, kind of moving down, no big retracements. That would be ideal. But I think ultimately, I think, you got to always look at the market as try to figure out the story. And I've always said this. Today's a Friday. It's been very bullish. If you got to put yourself in the position of other traders, right? If you were not just short-term traders, but longer-term traders, if you bought back in, Monday, right? What are you more likely going to do right now? If you bought back at Monday, where there was lots of volume, you can clearly see, lots of people buying. Yeah, you're going to take your profit at the end of the week. It's been, just look on the 4-hour chart. Look how it's, if I just remove all drawings.
I will join you, Sam,
it's been, why not? It's been a crazy bullish move, really nice and strong. We've taken out the all-time highs. as well. So that's going to add a bit of hesitant of people, holding it over the weekend. When you're up so much and you've done so well, you're taking your money out the market. And I think the cumulative delta shows that clear as day today. Sorry, did you want to share your screen?
No. I because there is, I think there is a small lag in. I want just to tell you, if you could check the 5 minutes candle, like there is a potential trap buyers at the top. I don't know for ES, but NQ there is.
Here?
Yeah, no, but it's not that big compared to NQ.
Yeah, I mean, we've had this for this whole move down that we've just experienced. If I go to like 15 minutes real quick, this whole little move down that we had, right? We've had that appear quite often. So if we start from the beginning of the move, trap buyers 385, 342, push down. Trap buyers 189, 160, push down. Trap buyers 223, push down. Trap buyers 254, push down. So I think it's going to stably kind of drag down for the rest of the day now. I think as all the buyers are just getting out the market, the cumulative delta clearly shows. I mean, we're at minus 14,000 contracts. Even on the most bullish days where the market's been really bullish, I've never seen plus 14,000 contracts. So this is a lot of people getting the hell out the market right now. A lot of buyers exiting. And it's gonna trickle because of the liquidity, right? So you're gonna see this kind of like slow, unstable movement down, because even if people want to exit right now, say someone wants to exit 1,000 contracts, right? Hypothetically, there's not 1,000 available to take for the exit, right? So it's going to have, the market's going to keep kind of like accumulating but dropping down. So it'll be like a downward range almost, like on the short term. As it keeps finding liquidity, executing the order, finds the liquidity, executes the order, and just kind of slowly drops down. So it'll be a bit of a boring trade. It's not going to be exciting, but ultimately I do think we'll at least get down to these lows here for today. So I'll just let it play out as the session continues. Hopefully hits TP by the end of the session. If not, well, what can you do? We're going to have to call Aymane's market makers to speed up the process.
I'm with you.
Not to gap us over the weekend.
I'm with you, Sam. This trade, I think it's gonna melt. You remember last time when I said it's gonna melt?
Yeah, absolutely. But last time when you said that, a couple hours later, Israel attacked Iran. So hopefully that doesn't happen this time.
Oh no!
So that was people with information.
If I am
they were shorting it,
I think. So I got my confirmation candle here. Same analysis like you mentioned, Sam. Same, just the confirmation candle took this previous high, closed red, came back for the retest. I'm expecting those are, let's say, trapped buyers here at the top. We have minus 227 here, but still it's following, it's continuing pushing down. So if I am wrong, I am wrong. But what I didn't see before, it's this 23,218. So there is a high chance squeeze. What I will not like is getting a big retracement that's same like we got here. In this case, I am out, because my idea of how I want to see the trade is just continue melting down slowly and maybe big push down. So if we came back to take this high, which we could, I'm okay with it. But I'm still thinking it's bearish. Simply, we have big squeeze here at the top. We have a failure also here. You can see it's similar if we switch to the 15 minutes. We had the sort of failure right here. Like we visit the highs with high volume squeeze, and then we fail to break. So normally when we have a failure pattern, at least we will take those lows before going higher, at least. So yeah, the only thing that's, yes, I understand my stop is really tight, but what I want to see is really important. The way I want to see this trade based on those clusters, I want to see just no big retracement, just pushing down, or melting straight away, or slowly pushing down. So if it starts taking me out here, I am wrong, even though maybe later it will go down, but I am wrong.
Yeah, I agree.
Yeah.
I agree. I think I would love for it to melt, but I don't think it will melt. Just because of the liquidity. Like, if I'm trying to think mathematically, I don't think there's enough liquidity for it to melt. The market will just have to keep finding basically asks on the depth of market, right? And you can, you can see. Let me figure this out. So if there's buyer and I'm getting out, so let's ask. Yeah, we'll have to find asks on the depth of market where there's plenty. If I actually show the depth of market, well, you can let it play out. Or okay. No, that's fine.
But the way you saw it, Sam, I agree 100%.
Absolutely. So if you look at the depth of market, look at all these big numbers on the ask side, right? That's buyers, original buyers putting TPs on there and trying to get the hell out the market, essentially. So the liquidity is going to keep getting drawn to these bigger numbers to basically execute all these buyers getting out. So you're going to have that kind of slow kind of movement down. I don't think it will be like a sharp, harsh drop, because that usually comes in from aggression. All this isn't aggression. This is just the market fading off because all the participants are exiting, so to speak. This isn't like new sellers shorting the market. I like me and you, Aymane, are the weird people right now actually actively shorting. The majority of these people are not fresh sellers trying to get in. So, and that's why you're always getting these big clusters at the top. Again, these aren't really buyers. I mean, they could be fresh buyers, I guess, people trying to take the opportunity, but it's definitely, it will attract always where all the liquidity is, and the liquidity is up here. It needs to take it out in order to execute all these sellers. I mean, all these buyers getting out the market. It's quite complicated sometimes when you try and figure it out in your head, because it's all a bit reversed, because it's not aggression leading the market now. When it's aggression, you got to think it's quite obvious, but when it's people exiting, you kind of almost have to flip it in a weird way. It gets quite confusing, but the only way I can see it is down to the cumulative delta, and you can just see it clear as day. It's been negative all day, and so there's been more selling when there's been buying, but the market has clearly gone up. And obviously there have been buyers, like actual aggressive buyers buying the market, and that's why the market's going up. But all those sellers, they weren't aggressive sellers. Those were old buyers getting the hell out of the market, taking profit. So that's why you had an upward movement despite the cumulative delta being negative. Because it's almost lying to you. Like, it is sellers, but they're not really sellers. Do you know what I mean? They're just buyers getting out. And again, it starts dropping. So we're going to have that kind of very slow. I'm sure if you look on the 1 minute, it just looks really haggedy and yeah.
One point to my
like
stop.
A range, but moving down. I would say put your stop a bit higher, because I promise you, like, I don't think it's going to stop us out if we're a bit higher up. You can have that room. There we go. Now it's starting to move down a bit. Oh, it is melting. Okay.
Literally, can I share back? Sam,
so it must have grabbed the liquidity.
1 point.
Yeah, of course.
Like, whoa, take profits straight away. No, it
really?
took me out. It took me out profit.
Oh, my TP's been hit. Yeah, my TP just got hit as well.
Sam, I said it 2 times. I got it 2 times. It's gonna melt.
Okay, well,
hey,
you were right. You were right about the melting, 100%. Well done. I didn't think it would melt that quickly. I thought there would be more of a slow as it grabs liquidity, but it must have hit that. It kind of like a tipping point. It fills all the orders, and then boom. But yeah,
I
TP
want
hit.
to show you guys
Well
that
done.
it didn't let me. If you go back to the recording, you will see my stop was at minus 600 and I put it at minus 825, and it came back at minus $800, and it ran there. But I deserve, guys. You remember 2 days ago what happened to me?
Something
I was
Yeah.
just happened.
Sorry, you're breaking
I
up,
can't
Michael.
tell
Say
what
that
it
again.
is.
something in the news just happened. So they
Guys,
called me.
something is happening right now.
Ah.
Yeah. Hey, look, let me share my
Is that
screen.
why
Let me
it
share my
is?
screen
Okay.
real quick.
Oh yeah.
Yeah,
Trump,
absolutely.
right now. Trump was looking to drop
Hey!
Iran.
Trump.
Let me share my screen
Wow.
real quick.
This thing is melting.
Hey,
Sam.
that's what I'm talking about. Check this out.
Yeah, jump on it.
Good stuff.
Damn.
Yeah. Yo, check this out. I literally just grabbed it right here. And this thing just
Oh.
tanked. Like as soon as I grabbed it. This position went up. Yeah, something is going on. This position went from 0 to $100 in like 1 second. It seemed like.
Wow.
This is
Damn.
literally 2 minutes ago.
That's beautiful. What a trade.
In this position, and if you look at the price, if you look at the price on here, the field price is at 81, right? 81 is, wait, is that 81? Let me see. Yeah, it is 81. Okay. The field price on this was at 81. That's all the way right here. And it did all of that in 2 minutes. This is the 1 hour chart. You think this is the 5 minute chart or something?
Lucas says, love from South Africa.
Dang.
Hello, Lucas.
Crazy.
Nice to have you here.
That's wild.
Robert also.
What's up, Lucas? Dang,
Robert also jumped in on that trade.
It's about to hit TP right here.
Let's go, Michael.
It's about to hit TP. Yeah, this
Guys,
is nuts.
There we go.
I'm gonna go ahead and move my stop break even. I do know that.
When I guys say
Pull up,
it's gonna
pull up the trading platform where it's actually executed when it hits TP. I think it's going to hit it anyway. Like, you can put your stops to break even, but let's be honest,
this is going too fast.
Yeah, I think you'll be all right.
Yeah, that's what I'm about to do for sure.
If I was in your place, Michael, I would be out there.
105 point, put it at 75. And then this one's at 81, so I'll put this one at 79. Oh, TP just hit. TP just
3 TPs in a row. What a day. And you all guys hate Fridays.
3 TP, guys.
Yeah,
3 TPs in like
that was crazy.
5 minutes. That is awesome, man. So
Yo, that
good.
literally that hit it said 44. That hit TP in 5 minutes on a 1 hour chart in 5 minutes.
That's insane.
That was crazy.
So I guess the answer is everything I said earlier.
Yeah, I almost didn't. That's why I always say
was a load of bollocks.
Yeah, I like to split my positions up 1 and 1.
Like, I think we lost Michael.
I think,
but the way
Michael, you here? Michael?
Yeah.
Oh, okay. Yeah, there's like a 10-second lag for you. So
can you hear me?
So, Michael, you'll hear this in about 10 seconds time, but there's about a 10-second lag on you. So when we talk, we might be talking over you, but we don't mean to be talking over you. It's just because the lag.
Damn, that's so weird. Okay, I can't hear y'all. It seems fine. Okay.
But everything I said earlier then was actually, I was completely wrong. I don't think it was people exiting. I think it was fresh sellers jumping in. People knowing whatever the news was, there was clearly a lot of sell pressure coming into the market, building up, because if it was news related. So that's why the footprint is so important, I think, because, all right, you might get it wrong. You might think, okay, these are people exiting. All right, fine. But you could still see something was going on that was weird. Do you know what I mean? Something wasn't right from what you were seeing in terms of the numbers. So you could anticipate
That's
going to
why
drop.
I joined you and I said it's melting. Guys, 2 out of 2. 2 times we melt. Yeah.
Incredible. Really good stuff. There we go. What a session, man. I don't think we ever had three TPs
awesome. That was awesome.
In a row.
I don't even know what else to say.
What
I
a
don't think
trade.
that's ever happened before. I don't think that we've ever all hit TP in the same session.
I'm kind of scared to trade now, just in case, like, I undo the good we just did.
Right.
Oh, dear. Well, let's see what Robert said. Robert also shorted the market. He said, I also grabbed on I want to pass the account, and boom. Well done, Robert. Well done. I'm glad you got in. Good stuff. Yeah, I've been watching for the second drop all morning. My pound US dollar short is going strong now too. I tried to warn Aymane to move that stop loss in time, but no. It's all right, Aymane. Not Aymane. It's all right, Robert. He almost got stopped out, but he didn't. And then he got it. So
because for me the idea of how, and this is I do all when I trade. So I exit the position when I am quick, like when I am wrong. Like I put what I want to see. Of course, not always happen, but I always put what I want to see, so I will not hope for something. So for me, what I want to see based on the footprint when I switch bias, no big retracement. So that's why in the beginning my stop was tight and I just give it a little bit higher. But what I want to see is no big retracement, because the numbers, they were there, or they are aggressive, they will push very strong lower, or we will retrace and it will be absorption. So I am wrong anyway. So that's why.
Yeah, exactly.
That's why, yeah. But good stuff.
I mean,
good stuff, like Sam say.
Good stuff. Like, if you remember the depth of market, now look at these numbers. What do you think is going to happen? Look at that 540 something contract. Look how much sell pressure is now coming into the market. I'm not telling anyone to short the market, because it could be a bluff. It could be a I would never base my trading decision just on the depth of market, because these aren't executed contracts. These are just limit orders, so to speak. But you know, you're seeing numbers that are very unusual. You'll never see. I mean, it's very rare you see like 500, right? So what that's telling me, I don't think those are people actually wanting to get in. I think those are people kind of spoofing the market. They're basically saying, don't bother buying. We're going to let the market drop. There's no point trying to buy it, because look, we've got 500 contracts for 62.1750. So let's draw out 62.1750. 1750. So right here, you know, there's 500 contracts. Now, whether it gets to that price and actually executes those orders, that's another thing. People might cancel them before it gets executed. But it's a good sign that the market's probably going to keep going down. You see what I mean? We're probably got a bit more to go before any major, you know, stop. So yeah, looking the raw numbers can sometimes give you that little clues of what could potentially happen. Like Aymane said, he said, look, it's going to melt, just based on what the foot was showing you, you know. And in hindsight now, you can actually see, yeah, absolutely, it could have melted very easily. There was a lot of sell pressure coming in. If you actually look at the cumulative delta, at the peak, it was at 7.7, 7,700 negative right at the top here. But as we push down, just even the first little push, this part here, we went from 7.7 all the way before it melted to 13,000, right? So it almost doubled. Another 7,000 contracts, sell contracts, entered the market in this little part here. Just this little area here. Another 7,000 contracts came in. And the moment that whatever massive order this was, the moment it was fully executed and enough liquidity was there to provide the opposite side, it just boom, fires down, because there wasn't that many contracts afterwards, right? So we went from 14 to 13,000 cumulative, and then when it actually melted, it was only 15, so only an extra 1,000, and then 16, and now 17. So it's only jumped 3,000 contracts, extra contracts, all here, right? 3,000 extra contracts for all this, but 7,000 contracts just in that little area here. So you can see that buildup of pressure happening, and then eventually it's like a balloon that pops, and then boom, it just goes. It's rare to see those kind of numbers in the footprint and stuff. I wish it was like that every day, because then you can catch these beautiful moves. But yeah, I don't think it's slowing down.
But the way you built the context of exiting and red delta all day long, like that was literally what's happened. So maybe just the aggressivity or not aggressive, but the way you build the context for it. Because everyone could have footprints, but to build this context that okay, delta all day it's red, market is pushing at the top, high volume squeeze. So it's all that context of those numbers that you compare gave you that good trade. So GG's.
Absolutely. Yeah, always try and understand beyond the numbers, because the fact that there was negative cumulative delta for a large part of today's bull run. In fact, actually, no, I am. So the bull run started here today, right? And we were at 2.6 thousand positive delta, and it kind of climbed up a bit, 3,000, and then back to 1,000. So a lot of buyers got out, you can see. Then it went negative, but it still kind of pushed up. And that is a lot of people getting from earlier the week, getting out. And then it just melted. And then you had this huge buildup of contracts, massive buildup, man, 7,000 in this area right here. And that's why you got on the volume profile, it shows as well, right? You can see right here, look how big these bars are on the volume profile, right? I mean, there were more traded in this area, but that's just because the market spent more time in that area as well. But you can see it hasn't spent that much time in this area, but there was a lot of build-up, and then it just flooded. And there's actually relatively not that much sell pressure coming in as it floods down, because it's already too late. Like, the buyers there is no one buying. Do you know what I mean? Like, the market is done for. It's overwhelmed, and it will just gets flooded. So yeah, really cool to kind of analyze all that and see it happen in real time. That was wicked.
Good stuff.
Yeah.
Good stuff.
We'll look at.
Yeah. No, Aymane, you said it perfect.
Exactly.
Like, Sam, you built a great context around all of it, because sometimes it's good. Like God said yesterday, you got to know the full story. You can't just know, you got one piece of it and think that that's the whole puzzle. You need much more context than that, right? Like, it's for me, it's the M and W's, right? Like, it's M and W's everywhere, but to know where you are in the cycle, looking for pattern with level, that means a lot of extra context comes in.
Absolutely. And I think that's important as well. Like, even if you're wrong with the context, it doesn't matter, because you're going to be wrong sometimes, of course.
Right.
But it gives you that confidence to kind of keep in that trade or execute it, because you're not just looking at like one element out of context and say, oh, look, I see a doji or something. That means it will be reversing. Like if you're just taking it completely out of context, then you have nothing to build on. But if you're looking at it as like a story, say, all right, okay, this is starting to make more sense. You know, these people are probably going to get out of here. So a doji kind of makes sense here. It could be a reversal. And then you can kind of, you know, however you look at the market, you can kind of build context into it. And then, yeah, that was awesome. So Robert goes, sweet. He TP'd on my pound US dollar. Well done, Robert. Feels super nice. I'm back to where I was on Tuesday. I'm good. Good. Very good.
Absolutely.
Don't lose control works out.
Yep.
Robert, lately I feel like he's in a good winning streak.
Yeah. Yeah, I think Robert's always come with good news. I mean, I think it was like yesterday or so he had a couple of days ago. But apart from that, I had one little slip up, but otherwise, good news. I think this week has been quite a challenging week. I know it's been very bullish, but like for me at least, I found it. I really kind of lowered my risk and kind of just went for really short trades. I scalped a lot more rather than I didn't actually hold really any trades this week. Very quick scalps. And kind of looking at the week, I'm looking at it, I'm like, it's so bullish. It kind of doesn't make sense, but yeah,
it looks a little bit easy when you check, like let's say later the candlesticks, but it was trending higher but choppy. So it's
I think Michael's internet.
Yeah. So and because I remember the days of this week really well. So Monday, if you traded Monday, it was volatile. The ATR was good. Like on the 1 minute was 25 to 30. Why? Just because we had, I think, the war, like the ceasefire agreement. So we had a lot of volatility, and then the market knew that okay, tariff is good. There is China and US agree about tariff. The war also is calmed down. There is the ceasefire. So they knew that the direction is high. Now, when the direction is clear and it's going up, it's there where they play. Like they drop volatility. Like you see a 15-minute candle on NQ. Sorry, Sam, but I felt like Tuesday, Wednesday, and Thursday like I'm trading ES.
Yeah, no, you told me. And I agree. Like for me, it was even more frustrating because ES felt like you were trading. Well, there's nothing slower than ES, but you know what I mean? Like, felt like a baby version of it. I don't know, but it was just the choppiness of it, and yeah. So it was a very strange trading week for me.
It's funny. Like for me, when I check NQ, and I see the 15 minutes, like the ATR of the 15 minutes candle, and I found 10 points. Like imagine in a 15-minute candle on NQ, 10 points. And then I said, okay, maybe summer enter, so we should prepare to sort of this drop of volatility. So, and this is a good thing to talk about, maybe to expand it more a little bit and know your thoughts, guys. But I know like we are not trading the PNL, but it's really good to notice when the volatility is low, so you lower also your expectations. Or if you are targeting the same amount of money, you should increase the lot size. For example, me trading 5 micros, and I am waiting for the normal, like the standard for me that I'm used to see $400 trades, 300 something trade with 5 micros. So if I apply the same a little bit logic that I am like unconsciously, of course, we are not trading the PNL. I think you got me what I'm saying. If we apply the same logic, like you will be a little bit waiting for this like to see this average like between 300, 400, and then you feel like maybe you will exit. So when there is drop of volatility and you still follow like the same way you trade, like you will get stopped out a lot. Maybe the price will come back to your stop. So this is just my personal opinion, the way I scalp. Of course, I'm not trading the PNL, but unconsciously, when the volatility drop and you use the same contract, and unconsciously you expect to make the same money.
Yes.
So if you, in a normal day, you stop trading $600 or $700, when there is drop of volatility, you took the same trade, same moves, but you made 200. So psychologically, you think, okay, I still continue. I have to continue. Maybe there is another setup. I don't know your thoughts, guys, about.
No, totally agree. Totally agree. Like even with my trading as well, there's like a set number in my head where if the trade hits that number, like P&L wise, that's when I start already hovering over the exit button.
Yeah.
Because I know it's kind of like the upper limit of what to expect on average of my trade. Right. And if it gives me a bit more, great. But if I start seeing like anything, even the slightest thing that I don't like, I'm getting out, getting the hell out. So I never really TP'd, you know what I mean? Because I'm kind of always, I'm kind of limited by that amount. But if you, of course, if the volatility is off and you're expecting that amount, then yeah, you might be overstretching.
Yeah, same for me, right? So I know I trade. I mean, I do mine purely on like percentages, and especially with all the accounts that I have connected is like super super But to be totally honest, when I'm trading my main account, as soon as I see that comma come in that P&L, it's like, uh-oh. As soon as we get over $1,000, I'm starting to, I don't want to move from the screen. I'm kind of hovering around a little bit. I'm like, man, do I just close this now? You know, do I just close it? And of course, the way it works is if you close it, it's going to keep going. If you don't close it, it takes it away from you. So I just try to just stick to the process as much as I can. But yeah, sometimes I can't take it. I'm like, you know what? This thing's at 1,400. I'm good. This is good enough for me. 1,400 across all these accounts is totally fine. I'll just close it. But other times there's like, you know, I'll just leave it alone and it'll slowly get there. But yeah, that feeling of, because before it gets to 1,000, it could be at 300, 400, 5, all the way up to 800, 900. Now it's getting a little, all right. Now I'm thinking to myself, like, damn, do I close this? You know what I mean? Like I have that feeling of, man, that the emotion does come over me as soon as the account gets over 1,000. As soon as it happens.
For me, Michael, I will understand totally if you wait for your TP because you are a little bit more intraday swing. But for us, we are scalpers. We are really scalpers. Sometimes you see an amount of money. If you don't take it, you will never see it again.
Exactly. And I've been hit too many times where I was up a good amount. And then I thought, I'll just grab that little bit extra. And then it starts reversing. And I'm like, and it never comes back. And you're like, I could have been up 300, but I decided to, I don't know, get greedy and target 400. Why? Do you know what I mean? Like, why? No need.
Yeah, and especially if it's the first trade. Especially if it's the first trade of the day. For me, just if I am comfortable of what I see, I don't care what the market will do after, if it will go to my TP or not, because I know if I repeat the same thing again and again, base hits, take profits when it's good. I know that those small points like rain at the end of the month, it give you a big good amount of money. So
especially spread over multiple accounts, and you know, base hits really do add up. Like for me, it's the only way I've been consistently profitable is to limit the greed. When I'm happy, get out. When I'm happy, get out. I focus more on a higher percentage win rate than like a risk reward. Because although you could do both sides, you can have a really good risk reward, right? And a lower percentage win rate. And over time, it will kind of balance out. But like the psychology of it, when you have multiple losing streaks in a row, that kills you, man. Like I'd rather have a high win rate of like 80 to 90% win rate and just take the odd like loss and just take base hits constantly and grow that way. Because it just makes me feel better as a trader.
Right. No, I feel you. Because you got some wins under your belt. That's what it is.
That's it. Yeah, exactly. Absolutely. But you're right, Aymane, as well. Like the first trade matters, man. The first trade of the day You get that wrong, and then you could very easily slide into that kind of where you're trying to make up that trade in one go, and yeah.
The first trade, and especially for scalpers, is really important to give them this breathing room to take more opportunities. Because when we say there is a lot of opportunities, the way Sam also trade, literally, Michael, there is always an opportunity. Like maybe every 5 minutes or every seriously, there is all the way opportunities. Of course, I don't take them all, but at least in a session like from 9:30 till 11, at least there is 13 to 14 opportunity. But not all of them are good, but at least 7 or 8 are good. So that's one of the reason also that I take profit when I see I am up good, and I just like what I see. I don't want a deep retracement. Even I see like it will come back, retrace, and then go higher. For me, I don't want to be in the retracement. I take it out because I know that if I want to continue trading, I have another opportunity later. So especially the first trade, it gives you mentally like you are in a good spot. So even the second trade is a loss, you are good. Okay, maybe you finish the day break even. But if the first trade is a loss, just breathe air, take a step back, and then and then take a next trade.
I can only imagine.
Yeah.
I would have my butt cheeks clenched the whole time trying to trade all of those.
I wish I took that last trade though. I wish I took that last trade on my live account. That would have been beautiful, man. That would have ended the week just perfectly.
But you are up good, Sam.
Yeah, but I'm only up like I don't even know what I'm up today. Not that much though. Like today's my lowest day of the week. 384. So I'm not up much today. Like I missed a really good opportunity at market open. I missed a perfect trade. So I just had a bunch of like pre-market scalps that were kind of good, but it's pre-market. The market doesn't move much. But that would have.
I got a question for y'all. One of these somebody asked me about taking withdrawals like from your funded accounts. Like how do you they asked me, how do I do mine? Like, do you take half of it? Do you take a quarter? Do you try to pay yourself weekly, every month? Like what do you normally do to actually withdraw from the money that you make?
It depends if the student if the student it's their first withdrawal, take whatever it's available. That's my opinion. If it's their first withdrawal, anyways they will blow the account. They will not keep it, you know. And sorry guys,
it's kind of true. I mean, yeah. If they're like a student and brand new, I mean,
just take it out because you're gonna get too antsy. You're gonna blow it and you're gonna wish you did.
It's the worst thing for a beginner to get lucky at the beginning. Is the worst thing for a beginner.
Yeah.
If you make a lot of money trading as a beginner, why is this camera?
You see, again? Even the camera wants you to hear what Sam is saying.
Worst thing that can happen to you, because you will end up losing more money than you ever made.
Yeah.
Or just
a close friend of mine, when we were this was maybe six years ago. I mean, this is before I even got profitable. That's how long ago this was. But we were trading, and of course he over leveraged, and I think we made like $300. This dude made $3,000 on his very first trade, and he was like, "I'm about to quit my job." I'm like, "Please do not quit your job. Please do not quit your job. You got lucky. That does not happen often."
I remember, like,
and he just swore up and down. He's like, "Yeah."
Same thing happens. I mean, I'm pretty sure it happened to most people as well. Like that kind of happened to me. Wasn't my first trade, but I remember learning about Fibonacci. And it was like game changer for me. Like this is like when I was really new, right? Like
Sorry, guys.
I didn't even.
Yeah.
No, go for it. And I learned about Fibonacci, and I remember I did it on gold. Like I think it was like the 5-minute chart. I was like, any leg, you just gotta do it, and it worked out. It worked out instantly. It was one of those trades where you got in, and of course I jumped in at like a standard lot, and I think my account was like $500, and I jumped in at a standard lot, right? It's way over leverage. But I instantly, I remember just seeing the numbers just go straight into the blue. And it was like huge numbers. Like I doubled my account size like that. And I was like, oh my. I was like, this is it. It's the easiest thing in the world. You just draw it, wait for it to go.
Now.
And that's it. So I remember going back the next day, like logging in, all ready to make millions, right? Got my whole computer set up and everything. I was like, oh yeah, it's gonna be great. I was waiting for the Fibonacci. The moment it happened, and then it just completely failed. Like it just blew right through. Didn't have a stop loss. I kind of blew the whole account. And I was like, what the hell? It worked yesterday. Why didn't it work today? And
Why I said, Michael? Why I said like
they will do the worst.
Say that again, Aymane.
What was that?
Because my first withdraw, this is literally what happened. I took my first withdraw ever. The next day, I blow the account.
It happens, man.
And this is a pattern.
All right.
Sorry, Michael.
You said it's a personal account. It wasn't a funded account.
No, it was funded account. No, funded account. First payout from prop.
Oh, okay.
Yeah, first payout from prop. Like next day, blow the account. So that's why, if it's their first payouts, they should take it all. If it's not their first payouts and they are used to payouts, because now it's more they are looking for more, let's say, like. Sustainability, like they're looking more for long term, so they have to keep something. Otherwise they are just playing, okay, get everything, lose the account, buy another one. But if their first payouts, man, take everything what you can.
Take it. No, I agree. And just to show them that it's real too, right? Like I'm like, I'm just telling them, like, if you got bills and you've been spending your time doing this and you need it, go ahead and take it out, right? Like, I just think that's the smartest thing to do. And you got to feel it. Those first few times around, you got to feel that it's real. This is real money. So when you in these markets and you trading, know that it's real money. These not just numbers on the screen. Like, this isn't a demo account. So I always recommend take the money and run, all right? Later on in life, when you done built up some profits, some accounts, and you're not really stressed for the money that bad, then you can think about not taking all of it. But for now, take the money and run.
No, you're absolutely right. Like the amount of times when I started trading, for like probably the first 2-3 years, right, of my trading journey, I would have like good wins, but I would never withdraw any of the money. I would be like, no, compound it. And I would open up like a compound interest calculator. And then I would work out that if I keep making this amount of percent every week or every day, by like half a year's time, I'll be a millionaire. So I was so determined to kind of compound every penny I made, right? Which ultimately led to never rewarding myself, and I end up just blowing the account. So take withdraw, man. Take some money, enjoy it. It becomes real. The moment I started withdrawing money, actually, and thought, no, all right, compounding is good, but maybe take out a quarter, half, something of my profit. It felt amazing, man. Felt so good to know, I'm buying this with money made from the markets. Like, how insane is that?
Nothing
just came out of thin air.
Yeah,
just literally printed money. Yeah.
Coaches, I want your thoughts about one pattern, because for sure, there is a lot of break even and losing traders. So for me, becoming, let's say, a little bit profitable, that switch from losing or break even to a little bit profitable, what I had to do is simply I saw one pattern, it's repeating every week, which is I have just one day which I tilted, I lose it all. So in all, when I was break even and losing trader, when I check the data, okay, I have Monday good day, Tuesday good day, and I had just one day a week which I lose all the profit or lose the account. So what I start doing, just be careful that to avoid that day. So the moment I start to focus just to avoid that bad day in the week, I start to make just not big profit, but just small profit. So I don't know if you got this pattern also, like just one day in a week, it eats all your profit or you lose the account.
I never had like one particular day for me.
For me, it used to be Friday. That's why I just despise Friday. It used to be that day for me, Friday. Same exact thing would happen. Like I would go all week doing good, avoiding bad trades, hitting trades, and by the end of the week, I then gave half of it back, or majority of it, or all of it, and some. You know what I mean? And it always was Friday for me.
Yeah.
And then, like you said, I slowly noticed that, and little by little, I didn't just stop trading that day altogether, but I did decrease my risk. Like I went from to 75%, now I went to half, and then of course I kept losing, so I got down to a quarter. But I never stopped trading it. But even until now, as y'all see, like I'm a little fishy still about Fridays because I got a lot of bad experiences with it. So I either avoid it altogether or I just take it very lightly. Like it needs to be an A+ setup for me to like really take it on all my accounts.
Yeah. No, 100%. Like for me, I didn't have any particular day, but one thing I noticed that really hurt me, because I would have good days, very consistent, but then if I had too strong of a bias, like the amount of times where I'm like, no, it's going to be a bullish day, it's going to go up, it's going to go up, and I kept trading against the trend, trying to like, you know, get that. Is this the move? Is this the move? Is this? And then I'll just get stopped out. And I get stopped out all the way down before I realized maybe it's actually going down. Do you know what I mean? Like maybe before I started, before it occurred to me that, yeah, I don't think it's going up anymore. Like, so switching bias to me was a huge, like a huge thing. You know, just knowing when you're like, even if you're biased, even if you don't be so committed to like one idea, be happy to kind of switch it and be like, actually, no, that was wrong. Like this is gonna look at it with fresh eyes. Don't get that. What is it called? Cognitive dissonance or whatever, where you're kind of, you have an idea and you just see any evidence to support that idea, but ignore all the other stuff that clearly shows you're wrong. You know. That is hard to kind of overcome, but I think it's a must, at least for scalpers. Like you have to be able to overcome that.
For scalper, let's say, let's talk about myself. Like when I enter a trade, if it's not straight in profit, I know it's not a good one. Just because the time where I trade, it's not 9:35, 9:33 till 10:30. So there is volatility. So I am aiming for 20 points, 25 something, sometimes maybe 30 points. So the way I enter, if I'm not, let's say in the first 30 seconds, I am already in profit, I know that this trade is not good. So when I enter and I am straight stop, that's the one thing I do is I know there is something wrong. For example, Sam, you know, like there is absorption continuation. So there is, for example, big cluster at the low. Maybe I consider it like it's an absorption. That's why I bought. But instead, it's more like aggressive, so it will continue. And then I do what you say. So I just switch the bias. And if I stay married to this bias, I know that I will finish the day really bad. So definitely for scalpers, and especially let's say like we have just 1 hour 32 hours of trading. Like if you are wrong, you have to notice that something is wrong. Like something, especially like you get stopped out. The way I trade personally, like if I got stopped out, I know I did something wrong. Or I consider the absorption like it's an absorption, and it's not. It's more aggressive buyers or sellers, and they want to continue the move. And for me, I'm trading the reversal, so I have to stop it right away. if I stayed married to the bias, it's there where I
Yeah.
lose quite a lot.
Because especially as a scalper as well, like even if it is a bullish day, buying doesn't necessarily mean it's going to be a good trade. Like,
Yeah.
the amount of times I see people buy exactly when it retraces. Do you know what I mean? Because and then they'll be like, oh, they get stopped out, and then they get all flustered and stuff because like, how can I possibly have lost? This is such a bullish trend. It's it's a tough one, man. It's a tough one, but you just got to kind of hone in your skills and recognize when things
Where your
aren't
spot
working
is.
out. Yeah, like it takes time, but it can happen. And especially if you don't get greedy, especially as a scalper, if you take those base hits, you can have a really good win rate and you'll feel great every time. Like,
yeah, for me, I used to always take counter trend trades, is what I'll call them. Trades against the trend. Like, that's why if y'all notice when I draw that M pattern, I say I don't take that M at the top like that. Because technically the pattern has not changed. And I'm trying to catch the top. My bias is so strong that, I think it's going down now. Like that second leg of that M. I don't take those anymore because I used to get eaten alive. I want to say a good few years of my losses came from trying to catch the top. I'm thinking, if I can just learn to catch the top of it, get it here, and when it tanks all the way down, I'll make a boatload of money. Yeah, it sounds good in theory, but in actuality, that's not really how that happens all the time. Because you kind of can't tell, right? That's why I like now for that to happen, for it to break that zone, retest it, and then I'll grab that area to continue to go, right? I'll carve my little piece out from there. I'm not trying to grab the whole move at this point. So I'll only trade with the trend, like only. I won't take any counter trend trades, like zero. But again, that's the difference between day trading and scalping, because y'all got the opportunity to go both ways.
Yeah, no, absolutely. Yeah, as an intraday trader, I think trade with the trend. Like, if you're trading against the trend, you're hoping for a reversal. Essentially, that's the only way it's going to work out as an intraday trader. So,
and you can't really time that reversal like that. Like it's nearly ridiculous to even try to do that, right? I know we're going to get off. I'm going to show this really, really quick.
Yeah, go for it. Go for it.
Because for me, what used to happen a lot of the times is the fact that this thing could stay up here as long as it wants to. Like, there's no. I'm looking at this anticipating, right? But this is after.
We can't see the screen just yet. Here we go. All right, now we can see it. Cool.
Oh, okay.
Yeah, we can see now. We can see.
Okay, cool. Okay, so that is after all of this has happened. You know what I mean? That's why I always point out the fact that this is so important to make sure you know where you are in the cycle. Because after the 5,200 cross, then I can take these. But to try to grab this at the very top, like with this doesn't have to do this. This could do this. It could just keep on going and then finally break and run down, right? So you don't want to get caught up in trying to catch this top move here because you really don't know when it's going to happen. I'm only interested in this.
Yeah.
much simpler. You don't have to worry about your anxiety is much less. You don't have to worry about trying to catch
absolutely
trade or time the high because no one can really do that.
Break, retest, continuation. Absolutely.
Yes.
Take your time with it. Yeah. Don't be the break trader. Wait for it to come back, retest, and then continue. Give yourself that extra confirmation.
Yeah.
It generally ups your success rate quite a bit.
Like we always. That's those. That's those cannon fodder traders. That's what I call them. Be the first one to jump in. You get smoked.
This thing is still melting, guys. Like
I know. Well, yeah, I mean, you could see from the contracts, like it's not slowing down. You saw how many people in the depth of market. It was like it's going to just keep dropping until eventually. Well, who knows where? But
And no retracement, just small retracements and push down. Small retracements, push down.
the volume's there.
Yeah, I see your message, Robert. Yeah, hit me up. We can get that intra game up for sure.
Absolutely. Yeah. Book Michael for a one-on-one session if you like. You can check it out on the Discord. There'll be a little section, one-on-one section.
Yeah.
You can book him if you want. I believe you're available for one-on-one session.
Sure.
I'm not sure.
We'll get to it.
Yeah. But yeah, guys, that is time.
Yeah.
So awesome. Really good. I mean, amazing session, right? Fridays are the best days.
Great day, guys. Great.
Have a great weekend.
Great job.
Have a great weekend, guys. Robert, Aymane, Michael.
Guys. Yep.
See you soon. Take care, guys.
All right, Robert, Sam, Aymane.
Take care.
Thank y'all.